All right, good morning. How's everybody doing? Fantastic Wednesday, Thursday. Don't even know what day it is. We went live yesterday for the members only. We're going to do a public live stream this morning, see if we can't find some scalps. Or maybe even a position trade if this happens to be the cycle peak. I don't think it is. Some people do. Some people think alts are going to continue to bleed forever and only Bitcoin and Ethereum and maybe Solana will remain, but I don't think that's the case at all. But if it does, we'll short it. You know what I mean? That's the beautiful thing about trading. We don't give a squat what direction the market wants to take. We will take it with it. But right here, you can see you are pulling back to an area of potential resistance. It's just an old level. I mean, yeah, it's just an old swing low. It's not a daily swing low, so it's an intraday swing low, but it is finding resistance here. I tried to figure out what's going on. Best case scenario is I can pull out this wick right here. Might be what's doing it. Don't know. Don't really care. This is your dominance chart, so essentially, if this goes lower, some alts go up, right? It's that simple. This looks to me like a standard correction. This is a breakdown candle and a serious one. If you find weekly support, which is right here, you can see that the midpoint of this breakdown candle is lower than the support level. That is typically what we want to see. Now it's Thursday, so you've had 4 days, Monday, Tuesday, Wednesday, and today. You will have 4 days at today's close of pulling back, and you have not even gotten back to that part yet, so it's not even scary yet. As of right now, this is a standard correction. When I say standard correction, I just simply mean it's to be expected, right? If like all the alts that I have on the watch, which I know I don't have all alts, but I have like some of the ones that we've been looking at. If you have a favorite alt, drop it in the chat and I will put it on watch. But here is your alts watch list for now. You can see literally the only two coins that are up are Bonk and Litecoin, and Bonk's up 3% I mean, Fartcoin is down 8% today, right? 8%. It's down today. Coming into July's VWAP, so we might find support down here. You also have an old daily support right there. So there are two confluences on Fartcoin. But then we go look at Bonk, and it's up. Like, it's up on the day. Now, there is a resistance level up here, this purple line. This is an old 2-week close. Right here. It's the highest closing 2-week candle since December the 24th, or December 2024. You've not been able to close a weekly candle higher than that since then. So that area is acting as resistance. That's the purple line that you see on the chart. It's a decent area to use to mitigate risk by. That's all we're looking at these levels for. We're not looking at them to predict price movements. We are looking at them as areas of opportunity. So that's essentially what we're doing today. And you can see basically we were selling off. We come into the Asian session. Let's drop down to the hourly time frame so you can see the Asian session is right here. Boom, 2:00 a.m. That is your London, not Asian, London session. I don't know why I was saying Asian. We're London session, and it called the low of day. And not only did it call the low of day, but you literally been bouncing so hard since that point. Here's your daily open. So that is your low of day. Very strong bounce out of this area. You have the weekly open down here, and now hourly support. And that's the level that basically held. You did get a wick under that. You were trading under this level on the 1 minute, 5 minute charts, but if you were just simply watching that level, you could have potentially put on an entry for long. All right. But anyways, I don't know what's going to happen with this. I don't know, obviously, if we're going to get a deeper correction. The risk markets look like we could see a correction. As you can see here on the ES futures, you are currently trading under your intraday VWAP. Same goes for the NASDAQ. Down here, the IWM doing the same exact thing. So if we have all three markets pulling back, then, I mean, at the beginning of the market anyway, you could see a pullback on some alts. The rest of the market was bullish. It was bearish at the beginning of the session yesterday, and then it turned bullish. When we were live, we were in this area right here. I ended the stream right in this area. So you can see what happened after. Boom, it just went straight up. We've been seeing that quite often. One thing that I do want you to take note of for today's session is the VIX, the mighty VIX. The VIX is the volatility index for the S&P 500. It is currently trending lower. So we wanted to see a gap fill up here. That is a gap fill. If you fill the midpoint of the gap and the market rolls over or goes higher, that is considered a gap fill. We filled that gap and the market has been rolling over ever since. And today you have a trending day to the downside at the beginning of the session. We have another gap down here to fill at 1460. 1460. So looking at this chart, it does look like we would be bullish today on risk. A bullish day. So I don't know what's going on. Why are we pulling back? Maybe it's a buying op. Maybe it's a buying opportunity on risk. I don't know. And I do mean just for a day trade. I am not talking about a swing trade. If you buy the risk markets up here, you can get killed. Obviously, I mean, the market can go against you. I don't mean literal death, YouTube. I mean, the market can hurt thy portfolio as you are trading at all-time highs. So buying up here, and you're also coming into the top edge of the option market expected move. So yeah, it's a very risky place to be a buyer. Very risky place to be a buyer. So be careful. Tesla had their earnings last night, so YOLO plays did not work because we did not get the move we were looking for. You can see here, pre-market, you're still inside of this overall structure. This overall structure is a triangle formation. So we're essentially looking for this to either break out to the upside and hold it, then get bullish momentum above, as that would give us a measured move up to the yearly opening range. If we break back out to the downside, hold it, and get downside momentum, we have a measured move as low as 265-ish. Big measured move incoming. So we don't have to partake in any of this chop, right? We can wait. We don't need to get chopped up while Tesla decides what it wants to do. We can just simply wait for the signal. And then another thing that we're getting ready to take a trade on is going to be GLD, as we have broken out to the upside and failed. If you look at this on a line chart, that is a failure. We have failed to break out. Look where you are this morning. Pre-market, you're setting at 309. That's a $4 drop. So people absolutely got involved with GLD yesterday. Yesterday would have been a good day to get involved in GLD. I was up early this morning, so I did take a couple trades in and around the London session open. As anytime I'm up during that time, I definitely want to partake in any day lows or day highs that get called. All right. So I did make a little bit of money this morning. We are currently sitting in two positions right here. I have a very, very small long on Altcoin, and I have a normal size position on Bonk that is a short. The only reason I am short Bonk is because it's the only up on the day. I'm not trying to call a reversal on Altcoin as it is down 7%. That means it is extremely weak today. Fartcoin can move anywhere between 5 and 10% on a normal day's range. So we've already pretty much gone down to where we would expect a potential reversion to the mean. So that is the only reason there is a long on the chart. If we go look at our total 2 and total 3, they are both pulling back into an area where we would expect support to come into, and support is coming in so far. We're not seeing alts really show us that though. Some are. Hype is pulling back, giving back a lot of its downside move. Fartcoin is lagging. Bohm, which is Book of Meme, is giving back a lot of its downside move. Also checking that July volume weighted average price for potential support. It's a big level. Your whole month of July has been a bullish uptrend, so the volume is relative. It is important. Right in this area here will basically tell you who is in control of price for the rest of July's range. But we are getting ready. 7 days left for a fresh monthly open. The month of August is on its way. So month is pretty much done as far as the range. I'm not expecting a fresh higher high or higher low on any of these things, monthly candles, unless they are trading close to their respective high or low. Okay. And that's what we got going into today. So yeah, pretty much everything is still bullish on a monthly basis here. Only a couple of these are trading under their midpoints. So that could suggest weakness. It doesn't necessarily mean weakness. It could just suggest it. So once again, if you're looking for shorts, if you think this is the cycle peak, then you are going to be looking to short alts for that longer term bleed. Then you would probably want to short one of these weaker ones, one of the ones that aren't super strong. Like XRP is super strong. So it just means it's going to be more difficult for it to go down as long as sellers are not participating. You need to see sellers participating. Clearly, we had some selling take place up at the all-time highs. People are always going to take profits at all-time highs. So we always expect a little bit of a price wiggle in those areas. We don't ever really expect it to be a full-on reversal, although sometimes that happens, right? Everything works in trading, just not all the time. That is why we have to manage our risk. I'm so glad every one of you are with us today. So let's get started. So Bonk is bouncing. And here is your month on Bonk. Like, that is an insane month. And the fact that it has been trying to roll over for days now, has not been able to do so, speaks volumes about this pair. Now, I know there's some ETF news out there in the works. We still haven't heard anything, whether or not they're going to approve the ETF or not. I'm under the impression that if they do not approve, then you will give back a lot of these gains. Not all of them, because some of these gains are going to be spurred on from alt season by itself. The rest of the gains were spurred on because of the news. So it'll be like a sell the news type of event, more than likely. That is if the SEC disapproves of the application. If they approve it, then that could bring on more bullishness, but it could also bring on sell side as a sell the news, right? Always buy the rumor, sell the news. It's not every scenario, but it's a lot of the times. But right now on the hourly intraday, you are currently trading as an inside candle. So if I was expecting this to roll over, which clearly I took a short, so I had some expectations of it rolling over, I cannot predict what price will do, not an hour from now, not a minute from now. So all I did was waited for us to run above the previous hour's high and then reject. And if we did that, then I was going to take a short for a mean reversion scalp, simply because it had made a big move already this morning. All right. That was the whole drive behind the trade. So if I go into a small time frame here, you can see when we put in the high there, we were blowing up. Then when we smoked the high, we were lower. So it doesn't mean that it was less momentous or anything like that. It's just the way this indicator works. But I was just looking to take a short there if we were in or around the overbought area. If it rejected, I didn't know it was going to reject. It is impossible for me to know what will happen. I just wait for the candle close and I hit sell button with a stop very tight above my entry. Because if you're going to see bullish upside continuation, then I will get stopped out rather quickly. If I am right on my thesis and price rolls over at that area, then I can look for that reversion to the mean. We've gotten it. And I did not take profits because I started the live stream. So my stop loss will get triggered if it goes up above that swing high. And it will no longer look like a short, because if it was going to roll over, there is no need for price to go any higher than that point. Okay? As far as for liquidations. So if the sellers were in control of today's price range, there is no need for them to sell any higher. You liquidated the high of day and then rolled over. So we'll see what happens here. I was expecting a bearish engulfing candle here. I was expecting a bearish engulfing candle. We do got a bearish engulfing from this candle, but I was looking for it to drop below this. It did not. So this is a bearish engulfing, and now you're an inside candle. So I guess you could still short BOEM as long as you're not running these highs, or if you do run the highs and then instantly reject. There's an hourly supply zone there. I don't really care about that. I put a lot more weight on the higher time frame levels, but since the old 2-week open is, or close, I should say, is there, then maybe there's a little bit of confluence here. But with the VIX trading on lows, that's going to put bullish pressure on the ES and on the NQs. Bullish pressure, not bearish. Not, at least not right yet, right? And right now it's all choppy. So no one knows what's going to happen. The bears think it's going to be the top. The bulls think it's going to go higher. And market is just basically deciding which one of those people are going to be right. So it's just basically sideways. So we got a little bit of time here, 4 minutes. 4 minutes. And Altcoin currently down 7%. Penguin is down 9%. 9%. So it's actually down more. I do not know what this is. It's just an old VWAP. This is as well. We want Monday. That is Monday. Yes, so that's good there. So we've lost the weekly VWAP. We've lost the parabolic uptrend. Oh, during the live stream yesterday, we were trading here. We were on this candle right here, and we took the short, or I did, while we were doing the live stream for the intraday trade. So we waited. We got the New York session open, and then we chilled. We gave the market time to basically test the intraday, and I think, wasn't it testing also the intra-week VWAP? I don't see that line on the chart, so I must have deleted it by accident. But I was almost positive we were testing both intraday and intra-week VWAPs here. We were also coming back up into the 100 EMA on the 30-minute time frame. So it's down here, but we were looking for this area to be a short. So I took the short up in here, And it took a little bit of time to get going, but eventually it did get going. So yeah, took profits on that, and I'm completely out of it now because it's moved along quite decently. So here we currently are. So we're seeing what's what, right? I was able to short it right around this area this morning when it broke down through support. I usually don't like to chase price, but it was giving the setup. So I took it and I exited it down here as we were coming into potential support, the weekly open. So now I want to see if that is going to act as support. So here on the hourly time frame, our intraday support level that we are most concerned with on an hourly closing basis is one spot 3789. That's hourly support. That's the lowest closing hourly candle. So we don't want to see any more hourly candles closing under that price. If we do, then our support is not holding. Our long opportunity is no longer valid. So going back in time, you can see right here, this is not hindsight trading or cherry picking. It's literally what prompted my entry. I am long. You tested that level to perfection and bounced. You look at it on a 5-minute time frame, that is right here. Boom. And bounced. So this is where I'm long from. This white line is just the midpoint from the weekly open to that support, because as you can see for now, it's been acting as support. So you're not going back to that hourly support level. Kind of gives me a little bit of pause. Remember, when sellers are in charge, you get moves like this. So what happened? Why are the sellers like, oh, I don't want to sell it now? We don't know why. But for whatever reason, they have stopped selling for now. Will they come back into the market? Only time will tell. We will see. We shall see. So these are the areas that you can potentially look for longs. As long as you're trading under the weekly open, that is the level you could look for shorts. Please be understanding that you're already down 7% on the day. If you're only expecting a 10% move, that's not giving you much risk to reward. Now, I'm not saying Altcoin cannot close down 50% today. I'm not saying that. I'm just saying on a normal trading volatility day, I would not expect a lot more than a 10% down day on Altcoin. So it kind of puts the shorts on edge here. That's why I'm saying, like, if you want to short, then maybe something that isn't down 10% on the day. Now, clearly this, since it's up, is a lot more strong. So you typically don't want to short things that are strong. But at the same time, if you're expecting a lot of down today because you think the cycle is over or whatever reason, for whatever reason that you want to short, this might be something to watch instead. Those are two, and then Penguin is your other big mover on the day. If there's another big mover that I don't know or am not aware of and you want to trade it, drop it in the chat. We'll get over on it. We'll check it out. See what we got. Okay, so we got big up move on Apple right off the bell. So you're no longer down on the day. Big up move on Microsoft as well. Christine Lagarde is having a press conference. She is the person in charge of the ECB, the European Central Bank. She's Europe's Jerome Powell. So that can cause a lot of intraday volatility. I don't know if the press conference is still going on, but she was speaking this morning. There was a rate. Hang on. Well, here, let me just, instead of scrolling through my news bot, let me just see what the interest rate decision was. They did nothing. So they did nothing on the interest rate decision. And the ECBs, whenever they make interest rate decisions, it is important to the U.S. stock market. Of course it is. Anytime anytime a huge central bank like this makes a decision, it could affect the markets, but they did nothing. So it's that now they're only going to be paying attention to her tone and rhetoric, nothing more. As usually the world waits for the U.S. Usually the world follows the U.S. Whatever the U.S. does, not in all cases, like there for a while, the BOJ was doing their own thing, but usually the rest of the world pretty much follows whatever the U.S. does. So if the U.S. starts a rate cutting cycle, the rest of the world will follow. So when the U.S. cuts their rates, there's a chance that the ECB will do so as well in their next rate. Yeah. Excuse me. Trying to talk and take a drink at the same time does not work. Okay, so yeah, we're gonna sit here and see what this thing can do. Penguin was a high flyer. You've got this broader little uptrend going on here, and you're well stretched out away from your moving average. Bitcoin looks like it's trying to hold support. I love the reaction that we got during the London session here on Bitcoin. I absolutely love that. For longs, like I was absolutely expecting it to break down and go down to the weekly low, liquidate the weekly low, and then we would be looking to be a buyer. But hey, the buyers want to step in here or the sellers get exhausted, whatever, at the week open. I'm fine with that. It doesn't mean we will have an up day. It's just that's a good reaction off of a support zone. That is a scam wick. So ignore that. I don't think that's on every other exchange. We can look real fast just on one other exchange. We'll go to Bitstamp. Yeah, it's not there. See? Very small wick to the downside. I don't know why there's a scam wick on Coinbase. Usually Coinbase is pretty good about not doing that. So I don't know. But yeah, the weekly open's holding a support. You liquidated yesterday's low and ran up. So that's a good move. That's what we typically look for on reversion to the mean trades. After you liquidate the previous range low, you look for a reversion to the mean. The mean is the midpoint. Mean is the midpoint. You got a much deeper move back up to there. As you're all the way back up to the day open, like right here's your daily open. So that's been acting as resistance on Bitcoin. So if you're a bull on Bitcoin, you clearly want to see it get back above that. If you are a bear on Bitcoin, this is where you are looking to potentially throw on some risk. Your day high is all the way up here, right at a 4-hour supply zone. So kudos to anybody that trades supply zones, right? And that watches them. As you did get a big move down, however, you could not hold it and keep it. Like there's no continuation to the downside. That's why looking for shorts has not really been the ticket as of late. The reason we were shorting Fartcoin yesterday was a technical breakdown only. It's going sideways. It's very choppy here. It is making higher highs and higher lows. And then you break down below that. So if you're going to see downside continuation, then you want to get short, right? Anytime you do a technical break, you want to look to trade in that direction. Sometimes you have fake breaks, so you're not always going to win your trades, but it was a very legitimate trade. Very legit. Now we're seeing right now a 4-hour support can hold on Fartcoin. We've got plenty of time left on the 4 hours, so we don't need to be on the 4-hour chart yet. I typically don't like doing the reversion to the mean scalps right at the New York session open, as you generally get a much larger influx of volume, so the intraday chaos is much worse. It's a lot harder to manage those crazy moves. So generally, I don't like to do that strategy until after about 10:30, right? But I mean, you're not even getting oversold or overbought readings on the RSI, and we've been open for 8 minutes. So very tight trading here. And I am positioned for either way. Since I made money this morning, I have a little bit of money I can play with. So I'm okay holding a position in both directions, right? It's about keeping your losers smaller than your winners. I won $500 this morning, so I can lose 30, right? Good stuff. Once you learn that and truly implement that into your trading, you will be a profitable trader and you will grow your income. That is all you need to do. Manage those losers, make them smaller than your winners. Your winners will take care of themselves. As long as you're trading with the trend, you'll do better on the long term. You'll be able to stay in trades a lot longer. So like anybody that's been shorting for the last 2 weeks on Bitcoin, they have not been getting downside continuation. So their short trades have been getting stopped out. The longs, to be fair, have not been working either. You're in a sideways market, so mean reversion scalping is the thing to do. But once Bitcoin breaks back into trending, we don't know if it'll be up or down, then we can get into a scalp and look for a continuation and stay in the trade longer. Those trades will make you a lot more money in the long term than your intraday scalps. So generally what we try to do here in this community is we try to position ourselves on a scalp that can turn into a longer term move. But if it's a return to the mean scalp, then like on a 30-second chart, we're just exiting the whole position. We're not looking for continuation. We're just looking to make 2%. 2%, right? That's all we're looking for. It's quick, it's a quick buck. Just to pad the stats. Pad the stats, man. Pad the stats. Beware of the fee structure. Of course, if you're trading on an overseas exchange, Weeks is pretty good with their fees, and they have a sliding scale depending on how much volume you trade. There's a link in the description if you want to use Weeks. You don't have to. It's just there for your convenience. And you'll save 20% on all fees if you use that link. Yeah, that's what I use for now. I know Coinbase is now starting to allow people to trade futures, and that's what I do with crypto. I like trading perpetual swap contracts because there's no expiration. I do trade options, and I do trade ES and NQ. Well, I don't trade NQ, but I do trade ES and the MES. So I have to worry about expiration. With perpetual swap contracts, you do not. So they are very sweet. I used to like to trade the Bitcoin inverse swap instead because that was a good way for me to just make more Bitcoin to hold long term. But for some reason, we stopped doing that, and it really hurt my feelings. I was very upset, very mad with them. Because it's just a way to gain free Bitcoin. So if you have the ability to trade the inverse swap contract, a perpetual inverse swap contract for Bitcoin, I would do that if you're a profitable trader. It's a free way to make Bitcoin. Like, you make free Bitcoin. It's like, yeah, who doesn't want to make free Bitcoin? So now I just cash out my tether and buy Bitcoin, which sucks. Which I haven't done that yet. I still own a significant amount of Bitcoin, so I'm okay. But yeah, we're just kind of waiting for Bitcoin to take over the world. Like Max, whatever his last Kaiser, or what's his name? That guy is a maxi, bro. Literally thinks Bitcoin's going to destroy the state. Okay. Maybe 100 years from now, as long as quantum computing doesn't become a thing. But that's a little bit over exaggerated. Bitcoin is beautiful, I agree. It is a fantastic way to make extra dough. And Bitcoin on the CMEs was testing the intraday or intra-month VWAP here. This is on CME, so if you put an intra-month VWAP on your trading view charts, it will not line up with this. I don't know why they're different. They just are. But you can see here for the entire month, this is a 30-minute chart. For the entire month of July, you have not been able to really get any kind of downside continuation from that. So that's basically been the line in the sand for the bulls. That's basically where they've been stepping up in a big way. But once you get back to highs, then the bulls ease off. So you get this price discovery of just bouncing from highs back to the intra-month VWAP. And we're currently still doing that. Literally been doing it for a while now. So here we're at that midpoint area. We're still not showing any overbought signal or anything like that. Bonk is actually looking like it's trying to roll over. It's on very thin volume though. Bonk is a very thinly traded asset, so it's a little bit more difficult to get good limit fills. And sometimes you can get bad fills on market orders, so just be careful. Don't be trading these thinly traded products with big size. When you trade with big size, you can get wrecked just by simply exiting a trade. But we'll see what it wants to do here. I'm not looking at those moving averages. I just started recently looking at the 30-minute because it kind of helps newer traders identify trend a little bit better. Like, that's all I'm like, my channel is designed around keeping things very simple for you guys to learn. Is if you can identify the trend, then you're going to be a lot better off than a lot of people, because a lot of people still cannot identify a trend. They still do not understand it. They can see a choppy market, but they can't stop trading it for whatever reason. They are always expecting every day to always go up, or if they're on the sell side, they're always expecting every day for it to go down. When the market, like literally 68% of the time, is in a range bound marketplace. Like that's almost like it's way over half the time. This is what we get. So if you want to trade the trend, you need to be able to identify it. Bonk on a longer term, like on a yearly basis, is in an uptrend. And then for the month of July, it is also in an uptrend. So if you are trading Bonk for the breakout or for the upside continuation, then you would be a buyer at support, right? You would be a buyer every time you come down to these lows. This is a support, not because I say it is, because the market says it is. Now, at any time, the market can break that support at any time, right? So you have to use a stop loss. But that's what you would be doing. You would only be interested in buying on pullback days. Yesterday and today are pullback days. Anytime you pull back to support, that's a pullback. So you would have been a buyer there. ES is making a fresh all-time high, which we kind of expected that. We're looking for the VIX to fill that downside gap. I don't think you'll get there today, but ultimately that is what we're looking for. So we're expecting risk markets to stay bullish. Now, if Trump comes out with a bit of news today, like I'm going to fire Jerome Powell or something, you might get a spike back up on the VIX. But the yearly opening range has been pretty good area to basically keep your bullish shoes on. As long as you're below that, the bulls are still in control of the risk assets. I honestly believe that since gold is now finally rolling over a little bit here, we may see these individuals come into the risk markets. They were unable to sustain that breakout. That breakout is on both on a line chart and on a candlestick chart. So there's a breakout point on both. It's a little bit more obvious on GLD, sorry. So this looks way out in left field, right? It doesn't look like it's right, but it is. If I go to the candlesticks, you can see the white line encapsulates the wick highs and the wick lows. So that's your triangle on the candlestick chart. Your triangle on the line chart would be more in this area. So no matter what individuals are looking at, we can see the pattern, right? So this is why I don't want to be a seller right on the open today, as you've already had that expansion lower. So let it pull back to resistance. Where is resistance going to be? Well, I don't know where it will be for sure, like, because I can't see into the future, but we will watch this area. Right here, we can be sellers on GLD as high as 312.59. Right? So as long as we're trading under 312.59, we can be a seller. You can be a seller earlier than that. I don't know. I don't know what it will do. But you can see how your 100 is starting that rotational move back to the downside here. So if you look at this, not this period when you were choppy, because moving averages do not work in a choppy environment. It is up to you to distinguish whether or not you're in a choppy environment. You should have been able to do so right here on this day as you broke down. So on this day, you should have seen resistance hold. It did not. You broke out and closed above. So by this day here, you would have known you are in a choppy environment. So moving forward, you would not have been paying attention to your moving averages as much, right? There was still 2 long scalps that could have been taken in there. So if this is legit selling and it looks legit, we should get downside continuation. So as long as we're trading under 312.59, I like gold puts or GLD puts or spot gold shorts. Don't use 0-day expiration. Give yourself some time, please, if you take it. Like if you get a spike up to here, first and foremost, you're going to be watching the 30-minute time frame. If you're closing candles 30-minute or any time frame, if you are closing candles above this price, 1-minute candles, you have to be cautious on taking that short. If you're closing 30-minute candles above it, you definitely need to be cautious, because it's telling you, hey, there's a chance it might be doing either this or this was a bear trap. So you could still break out to the upside on GLD. This longer term pattern is not going to play out until we get the measured move. Once we get the measured move, then we'll be able to look in hindsight and say, well, it did break down or it did break out. Either way, we will catch it. The only way we don't is if we get stopped out. But we are prepared for it. So we'll be good to go. I'm going to set an alert here because this will be at the point, this gap is filled already. You filled it before you made it, if that makes sense. Okay. But we do know that gaps do tend to be filled. So we'll put an alert on GLD right here, just to let me know Here, let me do this. Just to let me know that price is currently working on trying to fill it. I don't necessarily want to get short there on GLD. And I'm only looking at the blue moving average. I am not looking at the 21, just the blue one. On the intraday time frame, I only care about the 100 on the 30-minute time frame. I do not care about it on any other time frame. So we're just looking to see if the sellers show back up. If so, we can look to sell. We can look to sell, not sell, but buy, put premium far out in time, like 60, 80, 100 days out in time to give it time to work. Also, that keeps you from losing so much money with theta decay. Theta decay can destroy a position, especially if it takes 8 days to play out. You know what I mean? And sometimes it does do that. Our Pepsi trade took a long time to play out, but ultimately it played out. We bought it here. We got up there, but it took like 4 or 5 days. And then when we got up there, it chopped sideways for like 20 days. So this was our like prime, like last take profit zone. It took a long time to play out. The other, no, this thing here, you can take profits. If you took this long with me, if you bought calls on FXI, we bought them down here at 37.29. This is where we bought them. If you bought them, close them. We got the move we wanted. If you have multiple contracts, if you bought 3 contracts, close 2 of them. Leave 1 on. Right? If you only bought 1, close it. Yeah, you might miss a bigger move, but you also might sit in it and this thing comes all the way back to your entry. So take the money while you have it. It just simplifies things. It makes it much easier for you to become a profitable trader in the long run. So close that baby out. But next, we were watching Home Depot to look to see if it was going to roll over. It did not. So we did not take the trade on it. We were watching it. It was on the watch list. That is all. We were watching. We wanted to see what transpired with this 21 exponential moving average as we put it on the watch list here. So when Tuesday happened, it gapped up. It gapped up above the July open. So we were not looking to short that. And then it was very bullish right at the bell. So it blasted right through this swing high and it did not reject and roll over. It kept going. So this was a trap. This was a area to pull in short traders who were watching the midpoint of this breakdown weekly candle. This is a breakdown from high to low. So if you were going to get downside continuation and another price leg lower like this, then we wanted to be short here. But we didn't get that. We got this move instead. So we didn't get in it. We didn't lose anything. Simple. Now it looks like it's going to continue up. So can you be bullish? You can, but you got to wait on another pullback. You can't buy it now because you're testing July highs. You haven't tested it yet, but you are going to be pretty soon. You may reject this point, but no longer is your signal telling you that you can be bearish. Right? You don't really have a trending scenario here. So a return to the mean trade in theory could work. If you liquidate the highs and reject, in theory, maybe you get a move lower. Just when you're doing those, keep in mind they don't work out as often. Right? You want to be quick to take profits. Is what I mean. Just be quicker to take your money and run. But yeah, we've broken out above the weekly high. So anybody that shorted Home Depot last week, they were stuck. So that can cause more upside buying pressure here. And you're trading currently above your weekly resistance. So there, to me, this is not a short. This would be a pullback potential buy opportunity on Home Depot. But we'll see. you currently have this pullback and breakout move. So you currently have an up price wave happening. I don't know if it'll continue, but that's what you're currently trying to work on here. And also earnings is real close next month on the 18th of August. So keep that in mind. It is choppy. FedEx, we were looking for this also to show us something, and it looks like it wants to go higher. And that's all the stocks that we currently have on watch. I mean, I have a bunch here, but I haven't found any setups. If you have a setup, I will look at it, drop it in the chat. Let's go look at our Altcoin here as it's rolling over. Coming back into that hourly support zone. This is a very important area for this if it wants to go up on the day. It's also going to be an important area if it wants to break down, because clearly it needs to break down. So at this point, I would probably wait for at least a liquidation below this low, or you can buy, throw your stop a little lower than that low. Just make sure you're not going to lose more than you can make if it goes to the upside. So generally about 0.25% or 0.5% on these. We're not looking for a lot. The pullback on alts looks, as of right now, just like a standard pullback. We don't have a larger time frame breakdown, is all I mean, right? So we want to basically still look at this as it is in an uptrend. I mean, a downtrend, but it is currently trying to, decide on that. This was a very extended move, guys. You hit oversold to the tune of 11. Of course, a pullback was needed. Like, that is big. So we've only, like, the last time we got down there was, look how big this move was to get in those areas. That move is nothing, and the momentum was just huge. So let the indicator cool off a bit, and then we'll see if this is just a standard pullback, a bullish or a bearish pullback, or is this a bullish correction? Because the trend is up on Bitcoin dominance. I know everybody else is going to say Bitcoin dominance is trending lower. It's trending lower for 2 weeks. Right? You've got 2 weeks of trending lower. This week didn't take out the previous week low. This week did. But 1, 2. You're in a 2-week downtrend. That is all. That is usual. Very, very usual for this asset. For you to trend lower. Now the move is rather large. That's because I don't know why, right? People were getting long alts. So it looks like it does want to continue lower. But you can go all the way to 63.15% before you actually find resistance. Yeah. Pepe pulling back. It's an inside, well, it's a trending candle for now because you took out last week's high. So it's just a trending candle to the upside. It is not an engulfing yet. If you take out last week's low, you're going to have an engulfing. You're going to have a new weekly sell signal also. Notice when you close weeklies under this average here, you get those sellers showing back up. So this week's close will be important for Pepe. Same scenario for Book a Meme here on the weekly. This is a larger term correction. Euro USD got stopped out. But you're closed above last week. This week you're looking to reclose back down. Still a trending to the upside candle. However, it is red. So it'd be a lot nicer if you close back above that high, but it doesn't look like you're going to get that unless you get 2 really big days. Altcoin is working on, it is a trending candle to the upside. You even liquidated your swing high back in May. So for a brief moment in time, you were able to trade outside of May's range, which was awesome. Because I'm sick of assets trading inside of May's range, May and June, because it's very choppy. We want to see continuation. That's when you make all your money, when assets continue to go. We have a trending candle still on the month, but oh, how nice it would be to close above 155. So this is just a bullish pullback for now, but it's a rather aggressive one. These over leveraged longs getting stopped out. That's all that was. Hopefully it stops and starts to move higher. So we did close an hourly candle above hourly support. This is where you're looking for your long entries if you are looking for long entries. Nice reaction here. Risk markets are bullish, so I don't mind looking for long entries. I got stopped out. So if it comes back, I will look for it again. I'm even okay with buying it here if it can jump above and trade back into it and hold. It's still very weak. You're making lower highs. This is a big move. Sellers are going to be hammering this, expecting this to be first leg of price. And Altcoin is going to be down big on the day if it is in fact going to be a measured move. If you do get a measured move out of this, you will be looking for a 125 target. It is possible that you go that low on Altcoin. And then Altcoin will look a lot worse than just a standard pullback. Because 125 in the weekly range is under last week's open. So that would be a gigantic move. I don't see it happening today, but it could happen tomorrow. Let me make sure I seen that right, because 125 is way under. Yeah, I seen that right. 125. Oof. I wouldn't target 125. If I was targeting that, I would only target right here. And I would target a little bit above that. So if you do think you're going to see a bearish engulfing this week, this would be a good target. You might bounce there. S&P's pushing up. NASDAQ still red on the day, but NASDAQ struggling to go lower on the day. It's staying basically inside the intraday VWAP volatility bands. Right here for now. It's a 15-minute chart, so each candle is 15 minutes in time. You can see those volatility bands kind of holding for now. And then here's your ES making a fresh daily high, and you're back to green on the day. This is a daily chart for NQ. Intraday. IWM still looking a little bit weak today, but I would say this is a standard pullback. I would say people are probably going to buy IWM. That is, in fact, of course, if it's still above the yearly opening range, because that was the level that we were looking for it to break above. We were actually short, looking for the breakdown, and it started to work, but then it failed. We were short here. We knew that this could be a trap, so we were in it, and then we were out of it real quick. Like, we didn't lose a lot of money. We lost $25 on the trade. We were looking to make a lot more than that if this breakdown held and continued lower, because the IWM has been struggling to close weeklies above the yearly opening range. 1, 2, 3. This is week number 4. And on the daily chart, it looks like this. A lot of chop slop here. But this is a breakout. This was a bear trap right here. And you're seeing that move higher. So I do expect buyers on IWM. And if the buyers are on IWM and tech is green, the ES is going to go higher. The IWM is like the RSP, right? It's like, it's basically what the rest of the market is doing. If you give them all an equal weighted market cap. The last time I tried to pull up the RSP, it gave me some stupid chart. Oh, here it is. So this is your equal weighted S&P 500 minus tech, right? With tech, you're already at all-time highs. Without tech, you're back to highs. So if your IWM, which is the broader middle market, or your smaller companies, the ones that are mostly affected by high interest rates, if once the interest rates start getting cut, this will probably soar. If they start getting cut quick, I don't think it'll soar if they stay restrictive. If they only cut 25 basis points and then wait a full year to drop another 25 basis points, that probably will not help the IWM. But if they cut, multiple times, and once this year and then multiple times next year, then I think you can revisit all-time highs on IWM. And that will also help the S&P 500. And because Bitcoin is a risk-on asset, we assume it will help Bitcoin. You can see that the sellers are not getting continuation down on Bitcoin. They are trying. They're just not getting it. They want it. Of course they want it. Just not able to get it. Altcoin going back to 1 hour support. So we don't know that the level will help. Oh, that's not Altcoin. We don't know that the level will hold. That's just the area at which we're interested in buying it. So the way that you would play this out is you can buy it now, throw a stop somewhere below. Or you can wait. I mean, you can never know, right? You'll never know. You're never going to know. Price is going to hold or not. You just got to take the risk. You cannot be afraid to lose the trade. If you are, you're using a too big of a position size. You are over leveraging yourself. You should be able to take 20 trades a day and never lose more than 1% of your total account's equity. NQ sweeping the lows of day. NQ sweeping the lows of day. So I don't know what happened there. Maybe the ES is just tired of running. Let's see if we got a spike on the VIX. No. This might be a little bit delayed. I don't know. So I'm short bonk. I want to see bonk roll over. I mean, I don't really care what it does. I don't own it or anything like that. It's not rolling over. It's just down a little bit more. But it does look like resistance is trying to hold. I just would love to see the sellers pick up some pace. Because whenever you're not getting breakdowns like this, that gives more time for big volume bulls to jump in. Because they will. They'll be like, the sellers are just, they're not winning. They're not able to do anything. So let's get it. Let's get it. Like 4 hours you've been trading in this range. Nasdaq doing more than sweeping the lows. Here are your lows. Nasdaq pushing lower. Apple's still up. It's up on the day and it's higher than yesterday's close. So, but the VWAP, the intraday VWAP is right there. I know you can't see it. Let me make it bigger for you. So these two purple dots, that's your intraday VWAP. So it's up here on Apple. And yesterday's close is going to also give you a little bit of confluence of resistance. So 214.32 is what Apple needs to hold, and it needs to give you bullish continuation from that point if the bulls are going to hold control. You can see Nvidia breaking down here, but it did yesterday too at the open. So these are 15-minute 30-minute candles here. So you almost an hour Nvidia has been trading lower. Look up here, this is your advanced decline line or your ADD. This is letting you know that the majority of the stocks are down today. You just don't have that bullish pressure that you've had for the last week. According to this, you do. You're still 64.38 in favor of the advancing stocks. Tesla's a big down day. IBM. Yeah. So if Nvidia gets steam to the downside, that will also put pressure. It's basically nil. It's neutral on the day. So if it starts to get steam to the downside, that will probably help this number get back in line. But I mean, it's not a really big red down day. You're mixed across all sectors here. Consumer staples are pretty green, and healthcare is pretty green. Financials is mixed. Industrials are mixed, and then tech or information technology, which is tech. Communication services and information technology is tech. But information technology is red. And so is communication services. So a mixed day out there. That's what I would expect in a bull market. Like just normal volatility, nothing major. And then for this, I only look at the S&P 100. I don't care about the S&P 500. It's going to give you the exact same data. Right? You might have like 300 to 200 or something like that, but it'll be the exact same data. This is the 100 biggest companies inside the S&P, so they control the flow. If this was like 90% red and 10 bullish, 90 red, the ES would be dropping hard. NASDAQ is what's putting the weight on the ES. So Bonk still refusing to break down. I mean, this thing has really been a nightmare for bears. I have shorted this biatch 3 times, looking for downside continuation. I don't love the buy because it's so extended, but I mean, it's been trading sideways for long enough now to where it can go either way, and up looks to be the way. The indicator on the daily is still very stretched out. You didn't even get to overbought on the weekly, so there is plenty more up this thing can do. I mean, it's a bull flag. As far as patterns go, your 4-hour time frame here, where's our weekly VWAP for this week? You can see it's been very mixed. Kind of even, right? The bulls had control of the market for 4 4-hour sessions here, and then the bears had control of the market for 1 2 3 4 5 4-hour sessions. Then the bulls had it back, then the bears, now the bulls. It's very choppy, very mixed, very choppy. But I shorted it here, then I shorted it here, and now today here. So I'm just returning it to the mean. That's all I'm doing. This is the market condition it's in. So that's the market. that's the way I want to trade it. Until it breaks out to the upside, that's what I'm going to do. If it breaks out to the upside, then I might want to get bullish. I might want to buy bullish pullbacks. The 4 hour is, I mean, you had it here. So the bears should have held it here. The bears should have held it here. At least run it down to this moving average, or that intra-month VWAP. They can't even do that. So people love bonk. They are buying bonk. Fartcoin, not so much. I guess people don't love the Fartcoin anymore. So we've gotten one 5-minute candle closure under. This could be a trap. I don't know if it will be, but I mean, you tried to hold it there. You're breaking it here. It could just be a very choppy, slow day. NQ bouncing off the lows. What do we have in the chat? Any new tickers? Heath, you're the best. Keep going. Greetings from Amsterdam. Welcome from Amsterdam. Next up, just a standard pullback. Felipe. That's just a little bit of clickbait on my side. I mean, it's not real bad clickbait. There are some people saying the cycle is over. That's all. But yeah, no, in the terms of a standard bullish correction, that is all we have right now. That is all anybody can say objectively. Objectively, it's just a cycle correction. Greeting, good morning. Could it be because of the 2 and 10-year yields holding up? I mean, could what be because of that? Like, are you saying could it be the cycle peak for alts because of the interest rates? I would say that a lot of people are losing faith in alts on the larger, like the people that trade alts are the ones that have been burnt before and they just don't care, right? They're never going to leave. The ones that got burnt badly that left, they probably will never return. Oh, the pullback? Yeah, absolutely. I mean, we can't ever predict where a pullback's going to come or when it's going to come. We can only trade it. Trade what it does. But yeah, I mean, it isn't great. The 2-year, 10-year has been traditional markets. It's been a pretty good caller of recessions in the past, but I mean, here's your 10-year 3-month. It's holding up as well. Above zero is typically good. That's what we want. It's only when we break down and then return back into this area that the recessions happen. And it has called like 90% of the recessions came after something like this. And then here's your 10-year, 2-year. I mean, yeah. But if we look at other ratios, people are not positioning for recessions. So I really don't pay too much attention to this chart. I know a lot of other macro people do, and this is the reason why a lot of other macro people are still looking for a recession. They got 1 quarter of negative GDP growth. This is structured like any minute now we can go into a recession, and we might. If the jobs number cuts loose to the upside, then we'll probably see that. As long as the jobs number remains stable, like there are other economic metrics that we must take into account as well. It's not just the 2 negative quarters of GDP. There are other factors. But I mean, yeah, there are some people expecting a recession off of this. Let me try refreshing this. See if that fixes its lagginess. Not really. Let's go look at a couple of these real fast. While I mean, Bonk is refusing to go down and Fartcoin is refusing to go up. So we kind of have this push and pull going on right now. So we'll just give it a minute. I do have a doctor's appointment at 1:45, so I will have to cut loose out of here around noon. But we got an hour and a half before that. So we should be able to get something by then, or we'll be ready for the second half of the day. But we'll go look at some of these, because these right here is what tell us if the people are positioning themselves for recession or high inflation. Where is my watermark? I just now am noticing that I don't have a watermark. Sorry about that. I didn't realize that it was gone. It was missing. But yeah, I mean, this is when people like here back in here, people were talking about a recession. And you could see that recessionary fear be priced into the market. But then boom, up it goes. So no longer are people worried about a recession. And then back here, it was due to high inflation. High inflation. So these were inflationary fears. So anytime you see fear in the market, no matter if it's recessionary or inflationary, those are the two biggest drivers for bear markets, right? I think. I mean, there are other reasons, wars and whatnot, but the two main reasons for bear markets are recessions or inflations. And you can clearly see when people start positioning themselves for those fears. We are not seeing that. We saw the exact opposite take place. We did see that happening when we were putting in the April lows. So back over in this area, we were very, very cautious about being a buyer. It wasn't until the ES hit oversold on the weekly where I started saying, now we need to start looking to put risk back into the market. So, but while this was going on, we had to be cautioned because people were positioning for a recession or inflation, whatever. But now you're doing the exact opposite. People are no longer positioning for that. All of these tell you that. They all say the same thing. So inflation, no inflation. Inflation, no inflation. Inflation, no inflation. So yeah, we can see when there is that risk in the market, right? Anytime you get a big down candle on a weekly range, then we have to start being a little bit cautious. Once you get 3 of those in a row, then you can be a lot more cautious. But we also know they don't last very long. Like the last bear markets we've had have only lasted for a brief amount of time. There are a lot of other macro factors that people look at. A lot of different charts. There are a billion charts probably. Well, that's probably overstating it. A million, let's just say 1,000 different charts that you can look at and say a recession is coming. But I would rather look at what the investors are doing, because the investors, those guys are the macro. And these ratios will show you. They will show you. Like this thing, when it starts to roll over, then you can start looking for your short trades. You're never going to be able to predict when it will roll over. That's the issue. That's the problem. A spiking VIX is concern, but we've been pretty good about keeping people on the right side of the markets. Back in April, when we hit bear market territory, I did not think that what was going on was enough to cause a bear market. I didn't. So a lot of people said that I had missed the top. And I said, if I miss this top, it will be the first top that I've missed, right? Because we're in a rate cutting cycle for the Fed. We're not raising interest rates. There are people on Twitter and YouTube saying that they will have to. But that is false. If anything, right now, the Fed will end up cutting harder. I don't see them raising. We've been in restrictive for a long time. So they're not going to raise interest rates. If worst case scenario right now, the way everything is structured, in my opinion, is if unemployment starts to skyrocket, the Fed will have to cut even harder. So I don't see a correction, okay, but I didn't think we were going to get a bear market. And we did, so people said I missed the top. But I said, we're going to revisit the highs. Like, I can't tell you when, but you will revisit the highs. You will. And I was saying that down here. I didn't know if it would keep going lower, but I knew we would go back to highs. We will always go back to highs. It's the way the economy is set up. It will always happen. The Fed will tell you before they start hiking interest rates. They will tell you months in advance. So ignore the people that say they have to hike. Ignore that. We are in a rate cutting regime. You can look at the Fed fund rate. It tells you that. You're in a rate cutting. I can't find it here. Is it this? Well, the 3 month is pretty close. This is the 1 month. This ain't it. Here, let me just pull up the Fed fund rate. There you go. There's your Fed fund rate. All right. So I don't know what this is or what this is. Get rid of it. Let's get rid of it. All right. So this is a hiking cycle. Then they paused. Inflation started to rotate lower. Now they're cutting. They're getting less restrictive. Now, I don't think they're going back to ZIRP, zero interest rate policy, but as long as they stay in a cutting cycle, that is ultimately more bullish than bearish. So you can watch this chart or just every Fed rate decision, and you can watch those ratios that I pulled up. They will tell you in advance. Like, you will start to see them position differently. You will see it go lower. You will see the market start to roll over. The bearish moves will get bigger, more aggressive. You'll see the spike in the VIX. All of those things are telling you that it is time to be cautious, that your uptrend may be changing. As long as you're in context of a normal volatility move, anytime you are inside of this or this range on the S&P, you are in no danger at all, none, of seeing a recession or high inflation. Even if you're under the red just a little bit, you're still okay, still good. Look what happens when the markets start to flip out. Boom. Now this is a daily chart. You get red day, red day, red day, red day, red day, green day, red day. But notice each week you're breaching that low edge of the expected move. This range, look at how much bigger it got. So this week wouldn't have been enough to tell us that something is up, right? So trade talk. If you're looking at this chart, what do you think? Are we cautious? Nope. We're still good right here. What are we expecting next week? Well, yeah. As soon as I see this, I'm getting more cautious. Because the ES is in when it's in a bull market, you're going to see like 70 and 80 point moves predicted throughout the week. When you're seeing 150, 200 point moves predicted inside of a week, then you have to be more cautious. Because the market is literally telling you, hey, something's wrong. Something is broken. We don't know if it's going to keep staying broken from this point forward, but at least for this week, be prepared for heavier volatility. We will know. We will know. And I mean, that was within a day, 1 day of downside. We knew coming into next week that we could see lower prices. We knew it. We knew it for a fact. I do a really good job of keeping people on the right side of the market. When we broke down into here, this is when we hit oversold on the weekly time frame. If you just look at this long-term chart here on the RSI, literally every time you get under oversold has been a decent place to be a buyer. Every single time in history. That will repeat unless the US is going into a civil war, right? Unless unless a whole new system is being revamped. Bar those two things, then there is no reason why you should expect the S&P to die, ever. It's always going to go higher unless there is some serious turmoil out there. So if you got serious turmoil, you need to be a buyer when you are in oversold periods, because in history that you did experience more downside. So you have to be cautious about that. You can get more downside. Just be very cautious. You start buying though. You're not going in the market heavy selling. You don't do that. You start to add to your long trade. If you're holding this thing for long-term growth, that's when you add. It has been that way consistently throughout history. So when we hit it here, I posted it on Twitter. I even said it in a video, maybe even on a live stream. This is when you start adding to the S&P 500. You don't go in balls deep with 100x leverage here. You just go ahead and start buying shares or calls or whatever, because this is the area where we typically see it be done. You were only in a bear market on the S&P 500 this year for 2 days. 1 day you traded under bear market. 2 day you never ever traded back in bear market territory after that day. This day you might have, had Trump not come out and said now is a good time to buy. Because that's exactly what he did. Now is a good time to buy. Look at that candle. That's like one of the biggest candles ever. And it's all she wrote. That's all she wrote. You midpoint check this beast right here. You had one daily close under it. The next day was well above it. A 1 day of, I don't know, maybe we see more downside. Next day it was like, nope, we're good. Or probably not. Up she goes. It's simple. You just be a don't be a pessimist, be optimistic. With alts, it's a little bit different, right? Because they typically do what? They go down. They do the opposite, right? Typically, these things are going down. The only time these things do good is when you get a little alt season. And we've gotten an alt season. Will it continue? Nobody knows. Is it still in the context of a bull market, bullish market conditions? Yes. So there is a potential probability that this is nothing more than a bounce, like a correction, a buy the dip opportunity. It isn't until I'm closing dailies under the July midpoint or the July VWAP that I'm like, whoa, something else is going on here. And until we're closing dailies back above that point, then I need to be cautious about being a bull. So if your favorite alt is trading under that right now, then you need to be more cautious. You can add to your long position if you want. Just be cautious because you could see more downside. As long as you're willing to be okay with that, then you can be a buyer. I mean, this thing is not breaking down. We are 10:30. We've been trading a full hour. So I'm going to take my money and run. It's not much. It was much more. It was down to almost $250 at one point. It's at 70. I am not going to let this thing turn back to negative. I refuse to do that. I absolutely refuse. It could roll over. I get it. I mean, at this scenario, best thing I could do is take off half. So that way it's impossible to lose money on the trade. Book about $30 or something like that profit and set a stop to break even, and I can't lose. So that's probably what I'll do, right? So we can set, let's get over to Bonk real quick. We're not in the Altcoin position anymore. It stopped me out and I never added to it. I wish I would have, but I was talking. You hear? I mean, this, like I said, this could be a trap candle. This is, you know, what happened. It doesn't mean it'll go higher today. I'm just saying this is where you want to be a buyer. Right? That's how you do this. That's how trading works. We can't predict it. We can know where we want to put risk on. That's all we can do. Sometimes we'll win, sometimes we'll lose. As long as we're controlling how much we lose, we will make money long term. Trading is good. It's good. I love it. All right, so up here on Bonk, I'm being threatened. So I must set a take profit. I'm going to take half. Wait. Okay, what did they do here? Why can I not do a partial? I want to do a partial. I don't want to. I want to do a partial. I don't want to close the whole trade. What is going on here? Let me try something. Here. Let me close the stop loss. There we go. Partial position. Okay, so this is new. If you're using weeks and you're seeing this for the first time, it's the first time I'm seeing it. This is all new. This is very... They must have done an update to their operating system because this is all new. There used to be buttons over here. So this is new. I don't know how to use it yet, but I'll learn it. So I want to take profits. Where is price trading right now? 36130. So 0 spot 036. Let's go 00. And I want to take 50%. That's it. I just want to close 50% of it. And the stop loss, let's go 0, 100%. Confirm. And there we go. So if I get a little bounce lower, it'll take me out with half the position. I'll have 111 shares or 100 and what? A little bit more than 100 coins. And I'm okay with it because if it is the end of alt season and we do finally get downside continuation, which is I very seriously doubt will happen, then I can always add to the position. But my position is being threatened. So I do not want to go out. If I'm going to go out, I don't want to go out red. And the only way to do that is to cover these fees. The only way to cover those fees is to get paid right now before I get spiked out. So let's see if we can get out. Let's see if we can get out here. Going to continue to push. Okay, so it's heading up the smoked last hourly candle high right here. So maybe it'll roll over then. If not, I might not even get filled on my partial. I've already made money on the day, so to be honest with you, I could just leave the stop loss the way it is at 0, and I could just exit to take profit because I made money during the London session. But it's important that I do things like this because I want you to understand how important it is for you to just not lose. Like, that's the only thing you have control of. You do not have control of if this price goes down or up. You cannot control that at all. You can't predict it. You can't control it. The one thing that you can control whenever you put risk in the market is whether or not you allow this to go against you or not, and how much you allow it to go against you. That is all we can do as traders, as risk managers, as market participants. That is it. That is all we have control of. So it looks like it's just going to go up and stop me. It's set to 0, so I won't lose money on the trade, but I won't have made any money on the trade either. Well, I will lose money. I will lose fees. So we'll get rid of the take profit and we'll just let it close us. All good. All good. We've had a fantastic week. An absolute stellar week. Been murking these alts left and right. We have eaten a few stops, but those stops were all very, very tiny losses. And I'm talking $25, $30 stops. And booking like $300 to $500 to $800 gains. If you can do that, my friends, your life will get so much easier as time goes on. You will be able to grow your account. You will be able to start making withdrawals. When you get to that point, it is so good. Because you've learned everything that you need to know. You're now booking gains. You're now booking profits. Booking profits is fun. Now you have to consult a tax professional also. I am not going to tell you what to do with your taxes. I have a guy. You get a guy. Because I let them do it. I don't want to screw it up. That's how you have to approach it as well. And it'll be okay because you'll have the money to pay him. It's always good. I don't understand why people worry about taxes. If you're a billionaire trader, then yeah, you need to be concerned because you're probably losing millions of dollars through taxes because you're doing them wrong. If you are a retail trader and you are barely booking gains, you should not even be worried about it. Just print your 401k or print off your trading statement that you get every year and give it to your H&R Block guy. They'll know what to do with it. Or they should. Right? It's that simple. Now, if you're making a lot of money, then obviously taxes are going to be concerning for you. But not in a bad way, in a good way. Making money is good. That's a good thing. When you can make money in the markets, you are doing it right. Never fear taxes. It does suck how much they take. I get it, but that's life. It's always going to be like that. You can never get away from it. Well, there are things that you can do that you can lighten your tax burden, of course. If you're rich and you can afford to pay back $100,000 loan every year, you can try to go that route. But I would let interest rates get a little bit lower. Like when interest rates were ZERP, billionaires were not paying any taxes. They weren't cashing out their assets. They were not selling their assets. You don't have to, getting a loan is not a taxable event. You do not pay taxes on a loan. And when you don't have to pay back any interest rates at all, then of course billionaires are going to get a loan to pay off their living expenses for the year. Why not? They can keep their assets. They don't have to pay taxes on their capital gains. They're rich, so they have several streams of revenue. They just pay back the loan at 0% interest. They have to pay taxes on the money, obviously, that they're making in order to pay back the loan, but it's less than it would be, say, if you cash out $100K worth of Bitcoin every year. You're going to get destroyed in fees. You're going to pay $50,000 or more into fees when you could just get a $100K loan and pay that back off of your already taxed revenue. That's how they stay richer. Or money is good. Money is a tool. It is a tool for your future. So Bonk is refusing to go down here, and Fartcoin is going up. Bitcoin is back to positive on the day. I believe that's a 4-hour swing high. It is. So we'll see if we stay in this chop slop. We should see a reversion to the mean here if it's going to stay choppy. So a short on Bitcoin could happen at this 5-minute close as long as it's, not continuing to go up, because then it will not be a short. Your risk markets is just made a fresh all-time high on the day. ES is making a fresh all-time high. VIX is currently, the NQ is currently trying to push up above the VWAP. So it's repairing the losses it made on the day. You have Microsoft trading up at day highs. You have Apple retesting midpoint of your last 30-minute bullish candle. Nvidia is back to up on the day. Wait a minute, I might be wrong on that. Yeah, it looks like Nvidia is testing the day open right now as we speak. So it looks like your markets are correcting back to bullish. It is a bullish market environment, so that's what we would expect. Well, according to the 5-minute chart, your day open is here. I bet, let's see if it's in the exact same spot. Because sometimes on this platform, it isn't. Yeah, see, it's not exact. And I don't know why. It should be exact. All right. So on Bonk, we have just eliminated the last 4-hour high. This would also be an area where I would want to see a reversion to the mean. So right here, that's not Bonk, sorry. We've already got that there. So we don't want to see any higher 5-minute closes from this point on if it is going to roll over. I don't know that it is. Everything else is staying bullish. And Bonk has had many opportunities to roll over today. What are we doing on VIX? We're still trending lower on the day, making lower lows, lower closes. It's a nice down day on the VIX. Beautiful. Jasmine is up on the day now. So Jasmine went from being really bearish to up. So London session called the low a day on Jasmine for now. W is green on the day. Bonk is up 5% on the day. Penguin is down 5% on the day, but it's repairing those losses at 4-hour res. Okay, old 4-hour res here. So no downside continuation, at least not yet. That would be the last area where I would expect it to go up if it was going to be a reversion to the mean trade. Clearly, it's got a lot more to go to get there. Yeah, price looks very light. They're back above the weekly VWAP. Buyers are kicking up. And you're seeing upside continuation on ES. You're not rolling over on the ES. It's important to know that, as it can keep you from trying to keep shorting those highs. You know what I'm saying? You don't want to keep trying. Even if you miss it, it is okay if you miss a short. You do not want to keep trying to short the highs when everything is pushing up. Don't want to do that. You want to keep your gains if you've made them. So right now might be a good time to set on hands. Because everything is still good. Everything looks good for upside continuation. How many days has it tested that level? 1, 2, 3, 4 days now. So it's probably going to break eventually. The more often a resistance level gets tested, the more chance there is for it to break. A lot of lower wicks on Bitcoin 4-hour. Yeah, it looks disgusting. That 4-hour chart. If you look at the 8-hour too, you even printed a bearish engulfing candle, but it did not close below support, and that was key. That was key. I was watching that. The 4-hour is very, very ugly. Very ugly. Yep, I agree. Disgusting. Very disgusting. Shorts are really upset. You know what I mean? The people that the people that keep trying to short Bitcoin, they're not loving it. They are not loving it. However, the bulls have been okay with it because they really and truly, like, this was the last stop run you made, right? Until here. So for a while, all these lows stayed in context of this low. You wouldn't have known that was going to happen because those are pretty large price swings on an intraday basis. Like this stuff here. This is the intraday chaos that I talk about. Like, this is exactly what I mean. People think that they can come in here and identify a candle to short and it will work every time. That does not happen, ever. Have I ever made money by shorting a 5-minute supply candle? Yes, I have. But that's usually when there's a larger time frame level there or something like that, or the market is trending in that direction and I just caught the trend, you know what I mean? But just having that as as this is a whatchamacallit candle, so price will roll over here. That does not work intraday at all. That is, yeah, this is what usually happens intraday. It's chaotic. You've got people looking at so many different things. There's so many reasons why people want to buy or sell at a specific price point. That's what makes it impossible. That's also what makes day trading so much more difficult, because those are the levels. So you want to short it. It's controlling our emotions and understanding when you're wrong. Like, those are things that you have to do for yourself. No one else can tell you how to do that. I can't. You just have to identify it. So, like, I can keep trying to short bonk, right? I can keep throwing a short entry out there. But what's the point? Like, it's not doing what I want it to do, right? All I got to do is wait one more 5-minute candle. That's all I got to do. If the next candle goes down, then maybe I do want to look for a short. But at any point it's back above it, then no, it's not. Shorts are generally easier than longs, because when you're right on a short, it starts to work really quick, really strong. So the first time we tested the level, the first time I shorted that level was here. No, it wasn't. That's 2 o'clock in the morning. Right here. This is where when we were live. Right here. So this is the level that I want to short. And I know for a fact that I don't want to see any higher 5-minute closes above this price. And I never got one. So it was very easy to set in that short. And the market almost rolled over instantly. At least for 20 minutes. It just kept making lower highs and lower lows. And on bonk, this is a fast mover. So whenever you're using leverage, it right there is a 3% move on bonk. That's a decent trade. But I just hold it, and then as time goes on, there's at no point am I in fear of losing. I mean, when it got here, you can bet when this candle was pushing up into it, I was thinking to myself, I might get stopped out here. But I didn't have to close it. I didn't have to do anything, because at no point did I get a 5-minute candle closure above that price. It literally gagged around here for about 20 minutes, but ultimately it rolled over, and there it is. There's the move. So, I mean, that's all I can do. So right now I can be tripped up by this emotionally, and I can throw risk on. But I know this thing can absolutely stop going down as soon as I hit the sell button and do this in my face. I know that because we've already got one there. There's already one above. And this one is higher than this one. This one was higher than this one. So the bears have to prove it. And if the bears are going to win this, if this is a short, what do we want to see? Well, first and foremost, we would love to see this or something like it, right? We don't want to see it doing this. And that's not good for us. That just means we'll get chopped out. Because like I said, using 20x leverage on this, a little wick up is a lot of money lost depending on the position size. So you need to see something at least. Like, I want to see the next up close. I want to see what that does. This was an up close that closed lower. So I can say this right now. I can short as long as we don't close another 30-second candle above that. But I won't know if that will happen or not. I just have to be willing to lose another $30, right? Am I willing to lose another $30 to see if this is where it stops? Well, ES is still pushing. You got a 64.15 all-time high. 64.15 spot 50 all-time high. If you get a spot 75, that will be another fresh all-time high. It's literally making all-time highs right now. NASDAQ is well above its intraday VWAP and pushing up. So do I want to short this? Right here, right now. There's my answer. The answer is no. Nope. We're not even overbought. Like if we were pushing deep into the overbought stuff, then maybe. But this can trade sideways. Price can stay right here. And this oscillator can go all the way to oversold. As it trades in a line right here at this white line. And then all you need is one big volume bar and you'll get a bullish candle spike that'll put you right back up into your entry. When the bears are in control, you get big ass bearish candles. Big red candles, because the sell side is more emotional than the buy side. Always. Always. In my opinion, it is so much easier to look for shorts when after you've gotten like a really big down day or something. Because you know, hey, the midpoint of that candle is as far as it should go before it rolls over. Here, like, you've got a resistance level here, but you're not liquidating any wick high. So could it reverse here because of 4-hour resistance? In theory, it could. Yeah, absolutely it could. Is that good enough for me to jump into the short? Not really. I hate losing money. I absolutely hate it. So let's see what happens. Let's see what happens. Are we going down on Bitcoin dominance? We are. Well, when this happens, I know alts can get really bullish, right? You're not even up on the day anymore on dominance. So the London session literally changed the market direction. And New York session did also. So the trend started in London and they continued it through New York. I am fighting against market trend. Intraday order flow is up. Altcoin, however, is still not really going up. I mean, it has. You've gotten a higher hourly close. So maybe if Altcoin revisits a support area, I can be a buyer. Now, I would be willing to risk that as long as everything is still trending higher. But risking a reversal on a market that is showing no signs of slowing down, the answer is no. You got to stop doing that. That is what is causing most of these traders to lose money. Most traders trying to pick reversals in a bull market, always looking for that reversal every single day, all day long. I missed the up move, so I must get short. I missed out on all the bull gains, so I gotta short it because I need to make money. I need to make money. And they're literally doing the opposite of what the market is telling them. You are exit liquidity when you short here right now. You are, anybody that bought during London, they are taking profits in your face. You are their exit liquidity. That's why it keeps going up. It needs to find supply. And until it does that, it's going to go higher. So maybe once everybody's done buying or whatever, I really don't know what makes these candlesticks build. And I don't really care. I don't need to know if it's buyers buying that's causing it to go up, or if it's looking for supply that's causing it to go up. All I need to know is, where am I willing to put on risk? How much am I willing to risk? And will I stop if I am wrong? That is it. That is trading. It is well above our point that we know the market has reversed many times in the past. So as long as it's above it, the market is saying to us, there is a chance it's going to keep going higher. There is a chance it is looking to go above this wick. Even if it were to drop right now and close this candle under this point, the risk is still right here. It isn't until you get under the midpoint of that to where that is probably no longer in or under threat. But right now, that swing high, which is a daily swing high, is under threat. You are a bullish. Nope. I thought you were bullish engulfing. Nope. If you take this high out, you will be a bullish trending candle. So order flows up, not down. They sold it at the open of Asia. They give you 1 hour of upside and upside continuation, and then the next hour they ran that high and dropped it like it's hot. Drop it like it's hot. That's all they did. So here's your daily open. Right there, we started a fresh new day candle. We made a fresh new day high. This was the day high. An hour into the session, you get another hourly open, and then through that period, 2 hours later, you get above that high, and then you close up above this candle. Then you open the third hour of the day. You run that high, and that's it. You're done. How do you know? Because it rolled over. It rolled over. So you could have been watching that high or even this high. You don't want to short it until price is under it. It's over here. So you short it anywhere at this line. Stop up there. This is your open. So give it time. Don't chase price. Give it time. It's impossible to know, right? This looks like at the open, people probably did jump on a short right there. Nobody has patience. Everybody's always afraid to miss the move. And that's what gets them killed. You have to be willing to not trade. That's the key to this. Like, not trade. Wait till that absolute perfect setup. And then you'll make money better, because you can watch this go against everybody else while you're not losing money. It's a fantastic place to be. Or maybe looking for opportunities elsewhere, right? Maybe that's where what you're doing. Why isn't Fartcoin back up? Well, clearly people don't like Fartcoin as much as they like Bonk right now. Same can be said for Penguin, but you've got a bullish engulfing here. So if the markets stay bullish throughout the rest of the day or the rest of the period, you will probably get a pullback. It might not be a full-on red candle, but when this candle closes in 47 minutes, wherever it is, when the next candle opens, you might get a pullback into the range of the previous candle. And I've already shown you guys what to look for a million times if you do want to buy it. If you think it's lagging for a reason or the markets are just still going higher, then the midpoint of this candle should stay intact. Wherever that will be. Well, it's not going to be red. It's going to be an up candle. So you would fib from low to high. The midpoint should hold if the market's going to continue. If price is pushing under that midpoint, you wait, because it's not doing what you want it to do. You must be patient. You must let the market do what you want it to do first. Then you can jump into it and throw some risk out there. Make sure it's not a lot of risk. And if you do get bullish upside continuation, if this was a bear trap, a legit bear trap, you've just liquidated this candle's high. So if it's going to revert to the mean, it should do it now. The next swing high to liquidate's all the way up there. There's some hourly wicks that you can get. But the bigger time frames are a lot much higher. So in theory, it doesn't need to go any higher. It's literally stopped out everybody that got short because of this candle. Breaking back under this trend line. Anybody that got short, which they probably weren't able to get short till this candle here, they shorted the open once this candle turned red again. So it only pushed into this range. This 4-hour candle only pushed into this range. What are you doing? Right here, when this candle opened, it barely pushed up. You can see that wick. It pushed back up into this candle's range. Where's the liquidation point? Up here. Right? It's way up here. So if you're trading up here above this point, you don't want to short it because there's a chance it's going for this high. But it pushed up into there, and that's as far as it could go, and then it turned red again. So that's probably when they fired the sell button. That's probably when they hit it. Here's the open of the 4-hour candle. It pushed up. Right here, they hit the sell button. And it took off to the downside. So anybody that shorted that, they just got smoked. So now the market's got to chew through all that and make a decision. Next liquidation point on the 4 hours way up there. So as long as price fails to go higher than this high, then you can say there's a chance you're coming back for a midpoint check. If it keeps pushing and making fresh higher highs after higher highs after higher highs, then this is going to be the next area. There's no point to be short based off of this scenario. The candles, they literally tell you what to do. You just got to know what's going on the larger time frames. You're trying to be a day trader, so get out of the 5-minute chart. Look what's going on the bigger chart. On the 8-hour, you're still in perfect confluent or whatever, for a downtrend even. So there is still some short side potential here on Penguin. So this is our risk point here on Penguin, even though this is a bullish engulfing. As long as price is trading under this white line, we can hold a short position on Penguin. Because for whatever reason, the buyers have not attacked it yet. Now they could at any point show back up. So I'm not saying that you will make money if you fire off a short right here and throw your stop above that high. That is not what I am saying. What I am saying is, as long as price stays under this, then there's a good chance you can target at least this down here. And if you're right, because of the 8-hour chart and shorts are jumping on this is an inside candle. This is a pullback candle from this breakdown. On the 4-hour, it's a bullish engulfing. So on the very near term, price has been more bullish than bearish this morning. That's all this is telling us. But right now, it's saying, well, sellers are showing up, but can they hold it? Remember, when the sellers are in control, price should go lower. If price stays in this box for an hour or two, you're probably wrong on the short. If you're right on the short, you should see stuff like this, right? If it keeps doing this, then it's probably not a short based on the data we have already. Okay? Shorts usually work faster and better. But that's only when the sellers are in control. When the buyers are in control, it can be just as aggressive back to the upside. So if it's consolidating and it's not getting deep pushes, it is not a short. What is more likely is when we get this 39-minute close, it's going to close in this box. And then the next 34-hour candle will open, give you a push down a little bit, and then is likely to run. That's just the way you can approach the markets. You will take stops. You will get stopped out. But as long as you control how much money you're losing when you get stopped out, then when you are right and you nail a good one, you're going to make twice, maybe 3 times as much. You got to be stingy with the losers. Very stingy. That's the object to this game. So we want to be stingy, stingy, stingy. We don't want to lose a lot of money. We want to lose very little. I don't know. I'm selling assets this year. BTC, ETH, silver. Once it gets in the mid 40s, yeah, you can do that for sure. You've had a nice run on Ethereum. You've had a nice run on Bitcoin. Like, if you have profits, there ain't no reason taking them. If you need them, like for living expenses or whatnot, it will be a taxable event, of course. But at the same time, if you need the money, you need the money. Like, I'm not a licensed professional. I wouldn't go get a loan right now at the interest rates where they are. There's other things that's going to affect your loans as well. It's not just as easy as, hey, I'm going to go get a loan and do that and pay all my bills with my loan. First of all, if you don't have a secondary or some kind of income to even pay the loan in the first place, then that's a very devastating thing to do. You're just going to go further in debt. People that have multiple income streams do stuff like that, right? They'll set aside one income stream to pay only the loan back. They already have the money lined up to pay it back or whatever. Like, they have projections on what they can. Like, most billionaires have multiple companies. Elon Musk has many companies. Elon Musk can have an analyst work up a projection for him on data to give him pretty much what he's going to make. You know what I mean? Or he does it himself. So that will justify the loan he gets. Like, he did that to buy Twitter. He went and got a loan. He did not. I know he did sell some of his Tesla shares, but he bought Twitter on a loan. I know that he got other investors on board and also got a loan. Not because he needed the money, just because at that time interest rates were 0. It made more sense. Why pay taxes on a sell side on selling assets? Why pay taxes on that when I can just go get a loan? I can pay the money back easily. I mean, Elon Musk is the richest guy on the planet. I think he loses his spot for a brief moment. Like it's between the top three men. Like they keep going up and down, but they're pretty much it. Like they have all the money. They have all the money. The 70s is literally when the rich got richer and the working man, like everything changed. When I was younger, in my early 20s, it was possible for me to work a job and make a little bit over what the minimum wage rate was at that point in time and still be able to afford to pay a mortgage. And I was, you know what I'm saying? Nowadays, you can't do that. Nowadays, one income will not, if you're making just barely above minimum wage in this state, I think is about $8 or $9. So let's say you're making $12, $15 an hour. That's not going to buy a $400,000 home. And in where I live, that isn't even an impressive house. That is a cookie cutter out west of town somewhere in some place called Spanish Lakes or some housing development. Prices range from the mid 250s to $500K. You're not going to be able to buy one of those houses on that kind of income. You could buy a trailer, possibly, or something like that, right? And live on your own. But yeah, things are much different now. Much different than even when I was a young strap just graduating high school. Very different, man. This country has gotten so out of whack. And I honestly believe the reason is because all the mortgage people that have literally bought up all the supply of housing, they have bought it all up and now they control the prices. It's insane. And I don't know how you can fix it. I'm not an economist. It doesn't matter to me. You know what I mean? But to someone that's just getting out of college right now, it matters to them. And for them, my heart goes out. It really does. Times are tough. Times are tough. So figure out a way to get an extra revenue stream. Instead of trying to YOLO trade and make $1 million in a year, instead of trying to do that, try to just earn a consistent revenue. Because the good thing about trading, with most strategies, you can move up as long as you're trading liquid assets. So if you have a proven system that works over time, you can move up as your income increases. You can increase your position size. It's a beautiful thing, but you must first get to that point. You will not get there if you're throwing everything at these markets all the time. Can't do it. ETH. Yeah, ETH is pulling back. But it might have been bought already. I haven't looked at it today. We looked at it yesterday. Yeah. Pullback where? Yeah, it's completely retraced all of yesterday's losses. It could stop here, though. It's a bullish engulfing for now. I wouldn't expect it to. I don't think 2 days, 3 days is good enough, but the market seems to think it is. The market seems to think it is. So ETH could continue. ETH can continue. The next level to watch on a bigger time frame, like on this chart, would be down here. I don't know that you'll go back down there. You probably will. We're seeing really here on the very near term, we're seeing risk assets start to slow a little bit. If the VIX gets down to this area here, we could see a mean reversion a little bit lower. $15, we haven't seen a $15 or under $15 VIX in a long time. Last time we were under 15 bucks was in February. And even then, you were not able to stay down there very often. That's because when you get down here, the premium on the puts is much cheaper. So people can start hedging off their risk exposure to the upside. Like your money managers and stuff, they have risk exposure to the upside. They have to mitigate that risk. In order to do so, they will buy puts, but they wait for puts to get cheap. So when you start seeing an influx of put volume come back into the market from hedging activity, then you'll start to see the VIX chop, back and forth, right? Back and forth as they add to that position. And when that's happening, then we can short for reversion to the mean trades, and we can also buy the dips. But right now, looking for a short while the VIX is currently in trending mode to the downside, it doesn't make sense to look for shorts, knowing that this is more than likely the target. So right here on the VIX is a gap. This gap has never been filled. Right? That is the definition of a gap. When the market closes and then opens higher. The reason the gap isn't up here, because that's where it opened, is because intraday it traded into the gap. So this is a midpoint gap fill. Technically, this gap has been filled. There is no gap here. I didn't look at this on an intraday basis, I don't think. There has to be a reason why I have that gap there. Let me see. I don't know why I've got that gap there. That gap is not a gap. That has been filled, baby. That got filled the very next day, and here, and here. So, at best, there's a gap there, but it's been filled. Look what the market did when it filled this gap up here. It just pushed up a little bit into the gap. Just a little bit. But the actual gap was there. From this candle to this candle, that's your gap. Where's the middle of this gap? Right there. So not quite a midpoint gap fill with this wick, but close enough. Clearly the market said close enough. Rolled over. So that's the only reason that gap is still there. It may want to get filled again. So, I mean, I'll leave it there, but I'm not looking for that to happen. I am looking for that to happen because I am still bullish and I expect the markets will keep being bullish. There is no reason for the markets to roll over here except for the fact that it is pretty extended. That is it. That is the only reason that we can say. We need the markets to have a correction because they're extended. But I would argue and say we had a correction. The markets can continue to run for the next 3 weeks. Bitcoin has been in a correction. This is week number 2. This is a correction. Bitcoin had 4 or 5 days of running and immediately went back into correction mode. This is normal because of the ETFs, right? Back in the day before ETFs, Bitcoin would run for many days before it would start a correction. But now that it's a much larger, the market cap has gotten much bigger. You got those funds that buy Bitcoin, they have to offset that risk. How do you offset buying Bitcoin? How do you offset that risk? You short futures. So whenever you buy one of these ETFs, they then have to go and buy Bitcoin and short Bitcoin. Because by you buying the ETF, that gives them long exposure risk. So they have to offset that risk And the way they offset that risk is either by buying puts or by shorting futures. That's what causes this stuff. It could keep going from here. Like, this has been a deep enough, a good enough correction. And here was your correction on the S&P 500 right here. So we pushed up right in through here. Then we went into a correction phase, set a bear trap on the last day of the correction and rallied. So we went into a correction phase here. We did not set a bear trap, but we did run the lows there. And then that was the end of that correction. You can see the S&P 500 run for 3 or 4 days. What's the IWM doing? Are we seeing that bullish push yet? To the contrary, it is not. But this is where I would expect support to hold. So I might be watching IWM here. Today's Thursday. Depending on how this thing plays out for the rest of the day, if it fails to close lower 5-minute candles, I might buy a call. Might buy a call because it just broke out. So it needs to hold support. It needs to show me that it's going to hold support. I don't know if I'd want to be a buyer if you take out the low of this candle, because at that point it's a potential bull trap. So as long as that doesn't happen today, I might be willing to put on a little bit of risk to the upside on IWM. Look for at least a 227 check. That's well within reason, right? Make $3, risk $1. That's if it holds here, right? Today at the close. I want to see this thing pushing well in back up into this level. But then if you buy a call, you're going to have overnight exposure, and that's always dangerous because we could wake up tomorrow and this thing could be gapping down here. And that would suck if you're holding a bullish call. So I might not do that. Just depends on what everything looks like at near the end of the day, I guess. Jurgis says they're thinking one more stab at the highs for good altcoins, and then the market is cooked. That's retail's problem right there, because that's what you're thinking. So is a lot of other people that just fail to listen to my voice or fail to understand what I'm saying. I don't understand it. I say the same thing every single day. That is the reason I'm not going to assume it. I'm not throwing you under the bus. Okay. I'm not disrespecting you in any way. If you are making money in the markets, then kudos to you. Keep doing whatever it is that you're doing, because it ain't broke. You know what I'm saying? You're making money. If you are not making money in the market, that is the reason why, because you are expecting price to do something. And since you expect price to do that, you will then use those emotions to then take a position based on that expectation. That is why you are losing money. It is the sole reason why you are losing money. I promise you, it wasn't until I understood that fact when I started to make money. When I started to be able to get to a position where I could work in my office every day. Once I realized I cannot expect price to do any freaking thing. Because what I would do is I would think that, expect that, position myself for that to happen, and then when I got stopped out, I would do it again and again and again and again until finally price did do what I expected. But then because I ate 72 losses in the first place, I had to take money quickly because at that point my portfolio was down so bad that I just needed to freaking put some money back into the account so I could trade again. So I would be quick to jump out of the trade. Because of emotions, because I was expecting something to happen. When you do not expect anything to happen, it is so easy to cut your losses and reposition on a different day in a different way, because you're not expecting that to play out. Because people on Twitter, the reason that this is a thing is because of people on Twitter. This guy, it might not be this guy, there's another guy, but this guy or the other guy that I'm thinking of is the world's worst. I don't know that this guy is a profitable trader. He has 523,000 followers. So if he is a good salesman, his sale ratio with that many people following him at a 1%, if he can get 1% of his followers to buy his whatever, then he is making a shitload of money just by selling stuff. All right? So that's number one. I'm not hating on him, not doing it. What I don't like that he does, I do it occasionally. I try to stop myself from doing it, and I will continue to stop myself from doing it, is like I will post winning trades, but when I make a call out, I leave it up. Regardless if it wins or loses, I don't go in and delete my tweets, right? It might not even be this guy. And if this guy gets wind of this and he wants whatever, I apologize. It might not be you, but there is a person that has a very small name like this that I follow on Twitter that has 500,000 followers that is clearly selling other things. They are constantly posting, I told you to do this. I knew this was going to happen. I called this. I did this. I did that. Like, that's the stuff that's destroying retail traders, because they think that this guy, or not this guy, but whoever is doing that, can do that. So when he posts on Twitter, I'm going to short this because of this, I think this is going to happen, he might not even be trading. He might not even be a trader. He might not be risking 1 single cent in the market, whereas his followers are. His followers think he can't never lose and he's always right. So they're going in there and they're going to bet hard. Yeah. I got him. Can you, you may have missed my comment above. Please take a look. Oh, okay. Good morning. Take a look at Bitcoin. Okay. But anyways, just to end that rant, those people are killing retail traders. It's their fault. And they don't care because they're driving around in Ferraris. Right? And it may not be from trading. It may not be from trading at all. They're driving around Ferraris. So they don't care how much money you lose. I do care how much money you lose. Because I know you don't have to be a freaking genius to do this. All you need to know is how to stop losing money. If you can do that, your winners will cover your P&L. It's a 50-50 shot of you being right or wrong. The math works. If you make 2 for every 1 you lose, you will be profitable over time. The math works. If you plug that algo into any AI, they will run that and they will make money. It's statistics, probabilities. They cannot predict what price will do. They might be able to say, I called it, but they did not. They did no such thing. That's what kills retail. Take a look at Bitcoin's price action around the $2 trillion market cap, 101,523. It definitely looks like price is respecting that area and maybe strong support going forward. $2 trillion market cap is what you're saying, the $101,000. Oh, yeah, 101. I know something else that's really big. Let's look at your 101. Well, just mark 101, right? Because it's around that area. It doesn't have to be exact or objective. It can be subjectively just 101. And we can look at how price behaved at that area back in the past. Yes, it looks good, right? We had a period of correction here and a bear trap. Smoked the lows and ran up. Like, that's why I'm watching last week's low, and I will continue to watch last week's low. I don't know that price will get down there, but if it does, I want to see what it does after. Because if it rejects the lows, then I want to be a buyer, right? Something similar happened here. This was the June low. You could be right on the market cap being $2 trillion at this price point theory. Your theory could absolutely be correct. 100% it could be correct. But my theory was simple also. This was your June low. Right there. That was the June low. We are still in the month of June on these 3 days. So literally all Bitcoin did was set a fresh June low and reversed. And we called that out also, but not because I called it, right? I said to watch for that to happen. If it does, it could suggest that is a buying opportunity. So you could have just simply watched July or June's low, and if we got back above it, buy it. And you would have almost bottom ticked the market. If you waited for this day to close and then wait for the new daily candle to open, that would have been a better opportunity because you spent less time screwing up everybody who was watching that level. So sometimes when Bitcoin does these things, it might not happen on that day. So like for instance, here is the next key level to watch because it is a weekly low. It is not a monthly low. It is just a weekly low. So the correction could be much deeper than this weekly low if we get a correction. It doesn't look like we're going to, but for right now, because we're trading at the high week close. But if it does, then I would want to watch this level. When it gets down there on the day, if it gets down there on that day, you can either A, try to buy it that day. You may eat a stop loss once or twice or 3 times, right? Because we know that these things don't just happen all the time in reverse. You'll get several periods of liquidating the intraday people that are trying to buy that level. So sometimes it's better to just simply wait until the next day. See how does that day open. It's right at the Asian session open. It's the first period of when you get the most, like the first time of the new day when you get an influx of volume. Asia comes online. So if they run that previous day's low back under June, or this weekly low, not a monthly low, but this weekly low, and then it reverses out of there pretty hard, like what we saw this morning at the London session, that could be an indicator to you to go ahead and put some risk on. Make sure you have a stop loss out. Make sure that stop loss is a respectable loss Make sure it's not going to kill your portfolio if you're wrong. Make sure it's respectable. If that is, you can put risk on there. And you just might catch the low, and you just might see a 3-week advance from there. Right? You just might. But your theory could be correct. It could be based on that. Now, something that you should be also very much aware of is this. Last week was huge for Bitcoin. It was huge in a very, very important way. Last week, the close of last week was the first time ever that the 200 simple moving average was above 50K. Why is this important? Because if you go look at the BLX index, which gives us not this Bitcoin liquid index, because it gives you all the data on Bitcoin, or any chart that gives you all the data on Bitcoin, buying the 200 simple has always been a good place to buy on the weekly time frame, the 200 week moving average has always. Now, did price push below it? Yes, it did. It stayed under it here for a long freaking time. It lost it here right when we lost a couple of exchanges. My downside price target on Bitcoin back then was 26K. We got 2 weeks of more downside because we lost 2 big exchanges, FTX, and I don't remember the other one, but we lost 2 big exchanges. Everybody thought Solana was dead back then. Remember? Solana was going to zero because FTX owned so much Solana, it was going to nothing. Well, we know that was false now. This is what I'm telling. Quit being quit listening to these uber bears, these only bearish people. They're always wrong. If you would have bought it even here, you would have sat in some downside pain. You would have been owner of Bitcoin at $22,000. In hindsight, you 4x'd your money. But now we have gotten above 50K. I'm not saying Bitcoin, when it has another bear market, 50K will be the low. I am not saying that at all. What I am simply saying is in the future, if you ever get a pullback and it comes back to that $50,000 region, that could be close to the lows. Could be. So now going back to an old friend of mine who apparently isn't my friend anymore. I don't know why, but I thought we had that as water under the bridge. But as of now, one could arguably say $50,000 Bitcoin is cheap Bitcoin. Back then you couldn't. Because back then the 200 simple was at 17K. But now you can say $50,000 Bitcoin is probably cheap Bitcoin. Right? So this is huge. I'm making a joke and I'm throwing a little jab, but I went over to the stream the other day and I said hi and I got ignored. They literally pulled up everybody in and around my name and responded to them. And literally, I put 2 comments in the chat. They saw me. Not even a hi. Nothing. Just flat ignored. That's okay. I'll survive. But anyways, if you're listening, bro, that's water under the bridge, man. We can get along. I still love you. You're awesome. But anyways, this will be a good buying opportunity moving forward if we do get into a bear market, which we will eventually. Someone will do something to cause a bear market. These politicians suck. It will probably happen, but it may not happen for several years. So I don't know, but this is big for me. This is big because my cost basis is under that. So I'm happy with that. I am very happy with this. You can even look at that moving average on the S&P and be a buyer on that. Once again, that doesn't call the lows, but if you can get an entry with a cost basis at and around that level, and you build a position for the rest of your life every time you get a tag at and around that level, you will do good in the future as long as everything stays the way it is now. This has always been a good place to be a buyer. Maybe not through here, obviously, because you did dump, but this was a circumstance that may never happen again. You know what I'm saying? Like this is a one-off, right? You do not see this happen often. There are several factors that cause this. Not just the housing crisis. That was huge, and that did cause a lot of people to lose their homes, and it was a very bad time in American history. But we were also at war, in 2 wars, in Afghanistan and Iraq. George W. Bush is the worst president, in my opinion, according to the amount of budget deficit spending that he put on the balance sheet. We went from being barely in debt as a country to being over 10 trillion in debt from his 8 years. $10 trillion. And that's because of this. This is also when the Federal Reserve changed. They no longer kept it a secret as to what they were going to do. They started their dot plot matrix here. They called it TARP. Back in the day, TARP started, and the Fed started telling the market what they were going to do months in advance. That was literally to make people come in and buy the market. They were afraid it was going to run off and crucify everything. They stopped it. So from 2008 on, the Federal Reserve has been market friendly. And until they stop doing that, they will be market friendly. That's why we watch the Fed. And then here, obviously, another blow off. I know people are calling this a bubble, and they can. It is bubble-like. Not gonna lie, the Fed's propping the market up. We're $40 trillion in debt by the time Donald Trump goes out of office. Yeah, probably a bubble. But I will buy a 200-week test, like I always will, forever, as long as I'm alive, on Bitcoin and this, until quantum computing threatens Bitcoin. Once that becomes a threat, then maybe I won't anymore. I don't know. We're a long way off from that. The party is here. Good morning. What's up, Nick? No, the pullback. Gotcha. I'm selling assets. Oh, I read that. Yeah, stop trying to predict what the market will do. Just react. Just react. Don't say, I think we're going to do this and then we're going to do that. Because if you say that, then that means you're going to act on that. And if you're acting on that, then that means you're against the market. You're going against the trend. And going against the trend is never recommended when an asset class usually only goes up. Right? It just makes more sense to be long and strong. These assets that grow over time. It's how Warren Buffett became rich. It's how most of your money managers get rich. Not because they think the market's going to have one more push up and then reverse. That is not how they're getting rich. Get rich, do what they did. Do what they're doing. My voice sounds so familiar, I can't put my finger on it. A lot of people tell me I sound like an actor whose name I know and can't think of right now off the bat. He died not too long ago. He's a Goodfellas actor. Some people say I sound like him, and there's a rather large YouTuber named Crypto Face that people say I also sound like. Goodfellas cast. I know his name. I am a movie buff. It's just since I got unhealthy, since my thyroid became an issue, my brain just does not work. Ray Liotta. But some people say I sound like him, and some people say I sound like Crypto Face. I don't think I sound like either one of them, but I can see the resemblance. With Ray Liotta, it's probably because I smoked 20 years of my life. He did too. With Crypto Face, we do sound similar, but just similar. Yeah, raspy voice, kind of deep. There's a slight southern draw in my accent. I can get super southern if you want me to. Hey y'all, how y'all doing? Because, yeah, right? But, yeah. CF said he got slayed yesterday. Don't know. Oh, Crypto Face, maybe? CF, Crypto Face? Maybe. Got slayed yesterday? Yeah. A lot of people got beat up yesterday. I was not one of them. I made money yesterday. I made money today. I made money every day this week, but I do lose money sometimes. I don't make money every day. If I had been able to sleep today, I would not have made money today. So the fact that I was unable to sleep and got out of bed, and that was around the London session open, that's the only reason why I made money today. Had that not been the case, my fart coin got stopped and my bonk got stopped, and I was on the opposite side of those trades. So I was literally short bonk and long fart coin, and they both did the exact opposite. Fart coin has stayed weak, bonk got strong. Right? So I would not have made money today. But because I caught the London Open, and I know that the London Open sometimes calls the high and low of day, I was able to get paid. That does not always work, but it is a strategy. There's a lot of strategies around the London Session Open. You got the London Open, that's a strategy. You've got an opening range breakout, that's a strategy that's traded around the London Session. You've got a lot of strategies trading around that London Open. The one that I like the most is the high or low of day. That is my favorite. It literally was. You got your London Open right here on this candle. You could have just waited until the 3 a.m. candle and hit the buy button at the open, and you would have made money. A little bit. That's what I did, and I got stopped out when it came back. But it was here. Not on this candle. My entry was under, so I got stopped out here. That wick was deep enough to throw me out of the trade. Here is a London Session Open where you did not make the high or low of day. Because here's your open. This is the low of day. Here's the London Open. So you did not push up and set a fresh day high and then reverse. And this was not the low. So if you would have bought here, you would have probably eaten a stop. So it doesn't always happen, but it does happen a lot. I won't go back in on all of these and find it, but you can, right? If you are done trading for the day, you can back test it and see just how often it does happen. But this is today, London Session Open, very next candle, boom, up. Oh, here's the London Open. Nah, this wasn't a nothing burger. There's a fresh daily high, and you made a low around 4 a.m. And it wasn't even the daily low, because this is the open. This would have been the daily low. So this did nothing. So there's 2 instances that did not work. Here is the London session open. Where is the open of the day? Right here. This is the open of the day. You trade up, you set a high. The London session opens right here. Trades up at 3 a.m. This candle opens. So 1 hour after the London session, it trades up, it smokes the high of day, and rolls over. So 2 instances where it worked, and 2 instances where it did not. How would I have known to short this candle? It is very simple. Are you trading at the high or low of day? It is that simple. When you go into the London session, it is literally that simple. So easy, right? You cannot make an easier strategy. There's your day open. Right there is the day open. Here comes London. Here's London's open. There's our high of day. That candle liquidated the high of day, and then you had one more liquidation. So the 3 a.m. candle was the candle. Oh, no, it wasn't. Sorry. It happened at the open of the London session. This candle opened right here. At this point, are you trading at the high or low of day? Well, this is the high of day. This is the low of day. Where are you? You are at the high of day. So you simply wait for a liquidation and then a reversal. If you get that, you short it. Boom. 2 hours later, you're out of the trade. It doesn't always work, but it works a lot of times. It works enough times to where you can make money doing it. You just have to make sure you're only losing a small portion of money when you're wrong. You can forward test it, back test it. I don't care how you test it. Test it. It happens a lot. Happens a lot. It might not happen as often on every asset, but it does happen quite frequently on Bitcoin. Because the London session is, sometimes it takes a little while longer to do it to it though also. Like here's a 5 o'clock candle where you did make the high of day, and then you rolled over for about 4 hours. So it doesn't work every single time. And here was a time where the 3 o'clock candle did it, but you only got a 2-hour push lower. But this is Sunday. Ignore that on Saturday and Sunday. It's only Monday through Friday. Ignore it on Saturday and Sunday. 3 a.m. did not set the high of day, but it did roll over. You were trading up around the day high. It has to be that day's high. It can't be the previous day's high. So here's your day open. There's your high of day. So there's your London session. 3 o'clock, you push up, but you don't quite get there, and then you roll over. So just fading the move into the London session. Yeah, it happens quite frequently. Shit, that's a 1-bedroom condo in California. Yeah, I know. Housing is freaking ridiculous, man. They need to do something about that. They have literally sold the children's future down the river, man. And every single president just keeps kicking that can. Oh, it's the 200. I was wondering what's going on. They just keep kicking that can down the road It's just going to keep getting worse and worse. We have to deal with it at some point. The government needs to do something about it. I don't know what. Like I said, I'm not an economist, and I'm sure the answer isn't going to be liked by any side of the political party. How to fix that, the housing issue, but it is an issue. How are you? You're not going to get young families to reproduce if they don't have a stable house with a stable job. They just will not reproduce. And if you do not reproduce, your country will no longer be a country in just a couple of generations. That is so detrimental. But there is a chart. There is a chart. It happened in the 70s where production kept going higher, where CEOs kept getting paid, and then normal workflow, the money, stagnated. That is also when the women went into the job force, so that helped push raises lower, because you now have women competing with young working age men for jobs. I'm not saying that it's because of the women. It's because of the CEOs. They were in a position where now they can change pricing on their labor force based on the fact that there's a new group of individuals coming to work. So the prices stagnated, but their income went up. Back in the 70s, the normal CEO's pay was around $100K, or like 100% that of your normal median working class citizen. So 100% more. Nowadays, it's like 700%, 500%. So production kept going up. Rich people kept getting richer, but the working class stagnated. And it's never been fixed. We have had how many presidents since the 70s? It is fixable. I don't know how to fix it, but it has to be. Otherwise, we're in trouble. I probably more than likely will not be around for that, and I hope I'm not, because there's only two things that can happen. Your country fails or a civil war breaks out. Something has to happen. Housing needs to get more affordable, and you can't do it by taxing the rich. It doesn't work for the poor. There has to be other ways. There has to be some other way. But I'm not going to get into all that. Like, that's not my job. My job is to get you to stop freaking betting in the market. Key for me was learning price action and dialing my STF entries. Picking reasonable targets by yes, not expecting is critical, for sure. For sure. It's the expectation that crucifies your emotions. And by doing that, you start betting more. You start betting because you're betting on what you think will happen. And you can't be betting on that. You need to be betting. You need to be putting risk into the market based on probabilities, not based on expectations. Because expectations lead to expectations. You're expecting something. So when you expect that, you will forcefully do other things you shouldn't, like try it again and again and again. Because you expect price to roll over, you will continuously short this market. So you will continuously get stopped out because this market is trending up. It is not trending down. Now, if we do go into a recession or inflation does start trending higher, then I will be right there next to you with those shorts. I absolutely will. Yep. I start shorting the market. If I lose a daily 21 EMA, I will start shorting. It doesn't always work. But that's when my rules allow me to be a little bit more forcefully on short entries. Right? It's a rules-based approach. I can still short on a scalp if we're above it, but I don't start to look for a trend lower until something like this. When I get this signal, then I will be looking for a signal like this, right? Probably or preferably around the Asian or New York or London session. I will look for a move like that, a rejection on resistance. But this has to happen first. Over here, I'm not. Does that make me a not good trader because I missed this short? Absolutely not. Did I get stopped out of a long here? Probably. That doesn't make me, that doesn't mean I don't know what I'm doing. That just means I was wrong that day. Oops, who cares? Big whoop. I will be right eventually. And when I'm right, I try to make more money than when I am wrong. So identify trend, that's crucial. And then try to avoid choppy markets. Or at the very least, try to get in at the lows of the range. The lowest part of the range right now for us is this weekly low. So people that bought this weekly or this daily low swing here, they got stopped out the next day. This is what choppy markets do to you. It makes it very difficult. So you could have eaten one stop there. You would have missed that move too. It isn't easy. What we do is not easy, especially if you're trying to put on risk every single day. You're trying to put on risk every single day. You're going to eat stops. It's going to happen. Because we cannot predict. I wish we could. If I could just go 1 second in time, 5 times a week, I would be a trillionaire. Give me just 1 second into the future of absolute knowledge of what 1 second candlestick will do. And I will be a trillionaire in about a year. Maybe not quite a trillionaire, but I will be buy an island rich. That will never happen though. So I can't build a strategy around that. I cannot. What is Fartcoin doing? It is back down on the lows. So Fartcoin longs just don't seem to be working out today. Well, to be honest with you, it's still okay. This is the level that we like. This would have been a riskier place, obviously, because it's not an objective price. It's a subjective one. This is an objective price, but I don't like this, right? I do not like, I want to see this happen and then a support at a higher price come in and then another expansion. Risk markets are rolling over. We've had 2 good trending days on the VIX. So maybe the trend is done for the day, or maybe this is an opportunity to buy risk. Maybe. That's the VWAP. That's a retest. I mean, the daily range is so very small. People will get long here. Obviously, I don't know if it will work. The people that tried to get long here on the NASDAQ, it probably did not work, right? Because it pushed much deeper under it. $23.64 and then $23.52. That's a 10-point move. So maybe I'd say a 25-point move would get you stopped out on the NQ. When I trade the ES, I'm looking for a 10-point move and I'm looking to risk 5 points. Risk 5 points to make 10 if possible. Sometimes I make it, sometimes I do not. And I like doing the VWAP. If the VWAP trades, they don't work out as often as an objective price point or a return to the mean or something like that. If you got confluence with that VWAP in like a daily swing or something like that, it's going to work out a little bit better. Well, I don't even know that to be true, so I guess I can't say that. I've never actually back tested it. But I do take trades based off the VWAP on the ES. Not all the time. I try to get those pullbacks in and around some like key swings, like around the weekly low or around a weekly high if I'm looking for a short. But trend, and there's a few things that I look at. So Bonk did ultimately reject that price, but after pushing very deep into it, it's not enough to say this thing is done. This pullback is very mild. Remember, the downside moves are more vicious. See, just look at the S&P. You can see that. I'll maximize the screen. So just looking at the VWAP here. So when you started pushing up 1, 2, 3 candles, it only took one to go this range. That it took 2 up candles to go. It only took 1 sell candle to get there. The sell candles are usually bigger than the buy candles. Boom, boom. See that price range? You got 1, 2, 3 up. 1 took out all 3. Now it didn't close like that. It wicked down, but it still went about the same size. 1 up, 1 down. Down. It's just bigger to the downside. But this is also emotionally draining when you're getting this stuff, because you're shorting it and then 20 minutes later you're getting stopped out. Then you see it stall and you throw another short on and you're looking for a key breakdown. This time you need a deeper move because you've got a loss. You need to make it back. And then 20 minutes later you're stopped out again. Then you short it again. 20 minutes later you're stopped out again. So short it here? Probably not. Probably not. It might work, but damn it, man. Probably not. All right, we're going to wrap this up. Does anybody else got any other questions? I got a doctor's appointment in an hour. I want to get something to eat and then get ready for that. I'm pretty much not really seeing anything jumping out to me today. Total is back to up on the day, which is nice because it was very red at one point. So I will be looking at the daily close on total, both excluding Bitcoin and ETH and the one that just excludes Bitcoin. Right? This is in the context of a normal trend correction. Oh, the trend is up. You're up on the year. You're up on the month. Your yearly and monthly trend, both of them are up. So in the context of those trends, this is a normal correction. It is literally last week's midpoint. So I don't know that will be the low of the week, right? I can't tell you that. But it still looks good. It still looks okay. I would say the trend is probably still... I would say the trend is still okay for now. I mean, you haven't broken the trend. On Fartcoin, you kind of have, but the trend that you've broken is a very near-term trend. It is not a long-term trend. This is the trend that's broken, and there could be a few people argue the fact that that's not even a trend. And I would say, okay, fair enough. But I mean, there is 1, 2, 3 touches, and 3 touches makes a trend. But that was where we shorted it yesterday. Obviously, in hindsight, just holding that short would have been beautiful. But it was a scalp. It wasn't a position trade because the market is bullish. It isn't bearish. If we get a few more days like this, then things will change, won't they? This will make things different. This 21 has already made things different. Okay, so yeah, this is already different. You're probably losing the 50. You're losing the 50 on the 8-hour time frame. So if the bears get downside continuation from here, then things on the very near term will be different. But it's going to be a struggle. That's that July mid, or that July VWAP support right through there. You lost it here, but could not maintain the downside break as it ultimately started chopping sideways, and then the bulls showed back up. So even though we've lost the 50 right here, right now on Altcoin, it does not mean that the bulls are out of this thing. It does mean they have lost it on the near term. But if it continues to print these inside sideways 8-hour candles for a couple more sessions even, I would probably be more prone to buying the lows, not shorting the highs, not down here. All right. So Altcoin, I will watch. If it breaks down, it's going to go without me. I am not in the short. I cannot take a short right here. It can literally reverse in my face. So I can't do that. Up here I could, because of the things were just different, right? They were just different. Maybe in this area, up in here, I could look for a short on Altcoin. But I need to see what goes on here first. So let's look through these real quick and just see if there's anything. For some reason, to me, hype is losing. This had an opportunity right through here to regain bullish momentum and keep it, and it lost it. Literally lost it. So I don't know what's going on here. This is no longer a pullback, in my opinion. When you have such bullish momentum like this, it should never take this much time of sideways to find those buyers again. So on the daily time frame, if this thing closes under the open of the day, the sellers are going to watch tomorrow. Tomorrow will be important, because tomorrow will either is this a bear trap? This is the second daily close under the 21 EMA. So right now you have, this is a close under. Yesterday, you did close under it. And today you are getting downside continuation. So we don't love that. If you close well under this today, like under, then you can say on the near term, hype has lost the uptrend. Not on the weekly, just the daily. Let's see the weekly. There's not enough candles to even put on there's not even 21 candles there. What about the 3-day? Are you kidding me, bro? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. We need one more candle to get a 21 on this. That's stupid. Whatever. LPT is in the process of losing, but you lost it here. This is the problem, right? The sellers got their signal. You are losing your bullish momentum. You barely had it for 1 week again and lost it this week. LPT was expensive on the funding rate. Is it still? If it's super expensive on the funding, then we can't trade it. But if it isn't, if it's gotten settled out, it's settled down. So the funding rate right now is paying shorts. The long positions are paying shorts. So you are paying the funding rate if you are holding this long. Now that changes every 8 hours. It doesn't always change every 8 hours, but every 8 hours you get a new funding rate. And it could be opposite. It don't, like, every time I look at the funding rate on this, it's paying the shorts. And the reason that is because there's a lot more bullish demand in it than short side demand. That's why the funding rate is skewed to the sell side right now. It's trying to bring in the sellers. And it's found them, but can they keep it? That's the question going forward. They have to be able to keep it. Otherwise, it's better to look for the long. But you've lost your weekly, and you do not have any bullish momentum on the week. So this is a weaker asset, WEAK, weak, because it's bearish on the year. And on the weekly time frame, this week, you're losing that 21. You're well under the 50. So the close will be important for next week trades. As long as you're trading above this, last week's open, as long as you're above that, then you can still be bullish, but very cautiously bullish. Cautiously bullish. You can even go tighter if you want to drill that entry down on LPT. So right here for now, the 4 hour is holding. You might not on the next close, but for now it is. So one could arguably watch this area. You also, this is low, is going to be a target to the downside. So this area could be a place to watch for a rejection. A rejection just means price trades down there and fails to get any downside continuation from that point. If that happens, you can take a shot at it to the upside. But if you lose that, then the bears are firmly in control of it. The week and everything. The weekly low will be the target. So that's that 4 hour support there. You did not liquidate. That's a double bottom. You see that low is 6445. This low is 449. It's a higher low. This is a double bottom and potentially a bear trap or a bear target. Sorry. Double bottoms are targets for downside if the downside has the momentum. You just made that. You just made that double bottom today. Okay. So if you want to take the short, because it's paying, you're being paid to take the short. Okay, so you have last week's open here, but I wouldn't take it there. I would want to see if you can at least liquidate that high, and then what happens after you liquidate that high. If you fail to keep going up from this point on LPT, you could look for the short if you get another push up into that. And then ultimately and finally on the very, very near term, yeah, it's okay. It's still a short for now. As long as you're trading under this moving average, you can look for shorts on all spikes, even if they go higher. That doesn't mean you'll make money, but the trend has, on the near term, reversed. So we have the weekly on our side, the daily, and this, saying the sellers still might have it. But at any point, the buyers can stop that. So I don't love shorts, guys. Not right now. Not while the markets are bullish like this. Not while everything is structured so bullish. But if I am going to short something, I do want to short the weaker ones. Jasmine is a weaker one. W is a weaker one. These are all weak. W looks like a double bottom as well. Jasmine, not so much. Jasmine can be finding support right now. So Jasmine, I'd be less prone to short it. The month, this VWAP is down here. That is the month VWAP. It's literally acting as support. Boom, you tagged it. You've been going up ever since. So on a technical basis, I would not want to see this close lower. I don't want to see it close lower than this one. I don't want to see it close lower than this one. So if the bulls have this on the near term, they should be able to pick it up here. It should be able to pick it up here. Bulls are still in control of the daily and the weekly. So this one, not really a short, even though your 30-minute chart says it may be a short. Your daily and weekly says the bulls might still have it. So it's a little bit more risky of a short, but it could still be a short. But you know where you're looking for the short. Up here, resistance. You can't short it down here. It has to be up here, and only if you fail to close higher candles. Because this is a huge, huge level. And you got a bullish reaction from that. So right now, the bulls can be in charge of this. We'll see if they can hold it or not. And the big movers here, bonk. I should have shorted it. I'm just kidding. That's a joke. That's a joke. I'm only kidding. Just as soon as I would have tried to short that, I would have gotten stopped out again and again and again. I've already been down that road. I don't want to go back down that road, but yeah, it does look like we should have. Right? But there are other things we can watch to short. We don't need to short bonk. Bonk does not need to be shorted. Penguin is it's losing the weekly. Penguin, as long as Penguin stays right around this area, I can short it. Probably not on the daily though. Huh? No way, no way, no way. Yeah, this thing is still massively overbought. This might just be, this can get a deeper correction just because it could still be just pulling back. This was a big breakout. We did catch that breakout. That was phenomenal. I caught that breakout. I have a bad habit of saying we, but I mean me. But I generally post some of these things before I take them, and the reasoning behind why I'm taking them. Doge, still up. Yeah, Doge and Ethereum are not going to be ones to short, I don't think. They still have a lot of strength in them. This is their first week of pulling back. Whereas Bitcoin's in week number 2. Bohm is in week number 1 pullback. Hype is in week number 2 and has lost the low. I don't love that. That's where I would have wanted to see this thing find freaking support. Damn it. The sellers they're kicking this down the road. Look at this. This ain't at today's VWAP, so ignore that, but that is an intra-week. I don't know where your daily is. Ah, right here. Yeah. As long as we're not closing higher than that, I can short that. I don't care what this says. It doesn't say anything, but I don't care if it did say whatever. You're losing today, so today could be the trap. So we have to give it a little bit more time. But as long as resistance is holding on an intraday basis, we can take a shot at it. So hype, We like on the very near term for a short as long as 43.51 holds, or sorry, 43.045. This is that weekly low, last week's low. It is going to be crucial moving forward on this. So you can see that on the intraday price action is not being friendly to longs or shorts from this level, right? So just by getting short at that level, you might get stopped and then it still works out. So you're going to have to be a little bit more selective and patient on entry, because that freaking 30-minute indicator is way up there. But this would have been an awesome short entry. So you might not get a short entry today on hype. But I love stuff like this because that could be a trap. It doesn't always work, but in this scenario, it would have been a beautiful short based on the fact that you're under the weekly VWAP. That would have been phenomenal. I would have taken that. But I don't really see a setup I love on it right now. Maybe tomorrow it gives us a setup on it. It's not a very big mover though. I love trading Penguin and Bonk because they move, but Fartcoin moves too. But Fartcoin's giving us downside continuation. We just lost that hourly support on a half-hour close. It's the hourly close that's important though, not the half. So right here on Fartcoin, we may be able to take a long scalp only if we reject that 4-hour low. But I won't be around to take it. I gotta go. You guys can watch this point right here. You're looking for a mean reversion scalp only, and that's only upon rejection. That would have been a good signal there, but not quite low enough. So I wouldn't play around with it while it's doing this. This is just trying to pull longs in. This is clearly the target. Clearly, that's what the market is targeting. But don't buy this here. You need to wait for a liquidation and reversal. If you do buy it at all, it's down 9.7%. So clearly the bulls don't love Fartcoin today. But don't get chased into this. Allow the liquidation to take place. And you might not even get a signal. And that happens sometimes too. For that return to the mean trade. But keep an eye on that 4-hour low. Rejection back above it could suggest that you're going to retrace. Oh man, and that sucks. The retrace is not very far either. Ugh. Because it's down so much, it is actually going to offer up an opportunity, a good one. That's a 2% move. That's all we need on a scalp. It's going to happen right here, right now. I got an hour till I got to go. Well, 45 minutes, and then I got to go. But just watch this. If it happens, if you're going to be right, guys, it's going to happen fast. Okay? Don't stay in this thing if you're getting crap like this. Don't just leave it. Get out. If what I'm saying is going to work, you should see something like this and then this. That's what you're looking for. So yeah, if you just keep closing lower 1-minute candles, lower closes, lower close, lower close, lower close, it is not a mean reversion. It should just literally do it here and instantly reverse. That is good enough right there. I don't know if the buyers will hit it because you don't have a signal. What's that low? 605. What's this low? 606. It is a lower low. That's the signal there. Now we're chasing it. Your target is here, right at it or a little under it. But here it comes again. That's okay. Barely got it. This is not the, I don't think that is the July. It isn't. It's only there because I'm on the 32nd. Ignore it. It's literally not there now. So, okay, so that's not what we want to see. But let's see if we get it now. Nope, that's not what we want to see. It needs to go now. Like, if it's going to go now. Otherwise, it's not. So we don't even have to put risk on. Not right here. Dominance is pushing up, but it's kind of chopping. So we'll see. If you get a spike up here and it continues, then Altcoin will probably continue lower. It's telling you right now that it doesn't like the reversal. Okay, next low is right here. So if it hangs out under this line, this is the target. So you don't have to get long. That would smoke your risk anyway. If this is your target, that would smoke your risk. That's not a 2-to-1 risk to reward. So this isn't what we want to see. No bueno. Four-hour support. I don't love it. Not being that close to that swing low. Nah, this looks like it wants to make lower daily low. Yeah, that's a 15-minute close under. 5-minute close under. And you're getting a lower push. In theory, that close right there should have done it. And it's not. It is what it is. Today's a trending day. Reversion to the mean strategies work better on a choppy sideways day. You're trending down today. You're down 11%. Down 11. So this thing could keep going. We'll see. You guys have a fantastic rest of your day. If everything goes smoothly, tomorrow we'll go live again. And we'll try to find some more ops. Hopefully we find some that happen while we're freaking live and not before. Unfortunately, that's just the way it rolls sometimes. It has been like almost all week. The opportunity's been happening before. So I like this reaction, but I would like it to be more aggressive. I almost want to see an instant rotation back to the opposite direction. If it isn't going to do what I think it's going to do. This is trending. It's trending lower. Your ES is, though, back above the daily VWAP, your intraday VWAP. It's testing it right now to see if it wants to hold as support. So we'll see what happens later on the day. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and happy trading, everybody.